All right, good morning, traders. It is January 5th, 2026. My name is Coach Carignan. I am the lead instructor here at the BYOB Trading Room. That is the day trading division of the Hit and Run Candlesticks family. Thank you so much for being here. For everybody out there, I'm broadcasting in two rooms at the same time. I will try to answer everybody's questions in due time. Just be patient with me. Just if your question was not answered, please just re-ask it again. I appreciate that. Thank you for being here. Hey, good morning, Tony. I see Tony over here in the free room. Appreciate that, Tony, for showing up for our open house. Appreciate that. Thank you. Let's go ahead and get started. I think I got an announcement to make before we get started. Members e-learning this Thursday, January 8th, 2026. We have, it's going to be on trading plan, creating steps or goals, entry and exit rules, and how to review your trades, okay? You guys know that, in order to review your trades, you got to track your trades, okay? You're not going to improve unless you track your trades. All right. So I got a little spreadsheet. I might share that with you a little bit later on to see if you guys want to find that valuable and use it. All right, to track your trades. All right. So let's get started here. See what else we got. All right. So today's January 5th, not the 4th. All right. Thank you for being here. All right, so my SPY pivot this morning, 682. Above it, I'm a bull. Below it, I'm a bear. IWM, FNGU, Diamond Down, QQQ, all made outside days. Those are higher highs and lower lows, all right, for their daily candles. QQQ and FNGU closed under bearish traps and under their 17 EMA. That's an exponential moving average. While IWM closed inside a bearish trap under its 17 EMA, and Diamond Down closed under a bearish trap but over its 17 EMA. SPY made a lower low and a lower high, closing under a bearish cross and under the 17 EMA. SPY closed with a 2-hour downtrend and 10-minute bullish consolidation. SLV made a higher high, that's silver, made a higher high and a higher low, closing inside a bullish trap over the 17 EMA. Gold made a higher high and a higher low, closing under a bearish trap and under the rising 17 EMA. USO in a daily downtrend made a lower low and a lower high, closing under a bearish cross and under the 17 EMA. UNG, that would be nat gas, in a daily downtrend made a lower high and a lower low, closing under a bearish trap under the falling 17 EMA. US dollar index still in a downtrend, closed near the 98.45 area. SPY max pain, that's for the options that expired today, are 683 with a put to call ratio of about 0.8 puts for each call that expires today. Now, if this is your first time seeing this page, all right, I post this pretty much very often on my social media. It's also always in the room. All right, all of these are in bullish daily uptrends over the 17 EMAs, if they're over here. All of these are in bearish daily downtrends under the 17 EMA right here. If they got a little star next to it under the bulls column, means they're probably putting in a bull flag. I call it a launch pad from which to launch higher. All right, in other words, they're moving to the right, and they're putting in a flag, so it would be a bull flag, and typically they launch higher. Sometimes there's follow through, sometimes there's no follow through. So you can see on VVV we had it was putting in a platform or a bear flag from which to dive lower. VVV, as you can see, had a star next to it. The last two times I posted this, and you can see now it's having a breakdown to the downside. In other words, they dove lower from their platform. All right, so bear flags, if it's got a star, bull flags, if it's going to start over here. Okay, so those are our bulls and our bears. So there's daily downtrends, daily uptrends. Let's take a look at the markets today. Before I get started, I'm going to start the account with a new 30K account today. So my max risk is going to be 10%. So it's going to be $3,000. My daily goal is $300. All right, so that's my daily goal, 1%. Now, if I make 1% for 70 trading days in a row, I will have doubled my account, provided I didn't go down any of those days. But in 70 trading days, that's a very short turnaround time. Keep in mind, there's only 5 trading days to a week, so it takes a little while. It's not quite 2 months. It's going to take you a little bit longer than that if you're only making $300. But make a little bit more than that. Some days you'll make 2%, 3%, 4%, 5%. Some days you'll even make 10%. And you can see how you can get there faster if the higher the percentage you make for your daily goal. All right, so that's my risk for this morning. It's going to be $3,000. Again, the daily goal is 1%. All right, now I trade indexes, mostly QQQ and SPY. It's pretty much all I trade. Even though I do post these bulls and these bears over here, very rarely trade them. Very, very rarely trade them. Most of the time I'm trading QQQ and SPY. And I trade the two of those because they're highly liquid. All right? In other words, the options that expire today, there's so much open interest, there's so much volume in those that I can pretty much make a living off of just trading QQQ and or SPY, either one or sometimes both. So I focus mainly, even though I did share these earlier, I mainly focus on SPY and QQQ. Now we'll go visit the other indexes, all right, and we will visit any stock you bring up that you want me to take a look at. But right now in the pre-market, I'm going to share my bias, all right, for this morning. Okay, so you can see this is where we left off, this shaded section. This right here is the post market. Okay, would be everything on the left side of this white line. This would be the post market from Friday. Okay, everything on the right side of this line is going to be the pre-market for today. Okay, so I have a bias that when I see consolidation over prior consolidation, I typically have a bullish bias. As you can see right now this morning, okay, we've got consolidation. All right, all of this, see this box up here is over this box right here. Okay, so I have a bullish bias this morning. So I will be looking for a breakout to the upside. We'll see what happens. There's no guarantees that that's what happens, but I'll be looking for that and wanting to trade that bullish upside move. So what I do is I come in here and I kind of box it off. I put a little line up here, okay, over this line. Probably want to get bullish, all right? In other words, I'll want to buy some calls, okay? And then underneath this line, okay, I'll probably want to buy some puts for price to come down and do a gap fill, all right? So that's what I do. I kind of box it off. You can see this was my green erases red entry early this morning. We'll visit that in a few minutes. But you can see that's what we got this morning, okay? We've got consolidation up over prior consolidation, so that's a bullish bias. Now, we break down below this, all right? I'll be looking for a gap fill, all right? If we break out up above that, I will be looking for a breakout to come up here and test these highs over here to the left, all right? That's what I'll be looking for this morning. So I'm going to take this off, and I'm going to take this off, all right? I'm going to switch charts on you, all right? And I'm going to pick up the 10-minute chart. And we're going to look at the 10-minute chart from Friday. Okay, so as we can see, Friday, pretty much a down day. You had a 10-minute downtrend right here. You can see the 3 EMA is underneath the 8 EMA. All right, and both the candlesticks, the 3 and the 8, are underneath. See these red dots? That's the falling 17 EMA. Okay, so you can see they're all underneath that. So we had like nice little 10-minute downtrend on Friday. Okay, then it got stopped out, and then it started up again to ink out a lower low right down into the 680 area. All right, so there's SPY on the 10-minute chart. Okay, now after that, we went up and we got on top of VWAP as opposed to under it. All right, so we climbed on top of all of this price action here. So I call that 10-minute bullish consolidation. All right, so if you go back to my summary right here, okay, so you can see SPY made a lower low and a lower high. SPY closed with a 2-hour downtrend and 10-minute bullish consolidation. Okay, because we get consolidation right here. That is over all of this consolidation right through here, which captured a big part of the day. All right, so you got some consolidation over prior consolidation, so I call it bullish consolidation. Okay, because it's got this little wiggle right here where you got a 10-minute uptrend, but it's not really a 10-minute downtrend, but it's not really a 10-minute uptrend. And because it's all over this prior price action, I call it bullish consolidation. Typically, you have a 10-minute uptrend that just cuts off, or a 10-minute downtrend. But no, at the very last minute, they decide to put in this little wiggle, so I don't count it as an uptrend. I don't count it as a downtrend. I look at it as, well, they went up there and they consolidated. All right, so I call it bullish consolidation because they're up over prior price action over here. So that's bullish consolidation up over VWAP. Okay, now I use VWAP every single day. Okay, it's a measuring tool to tell me if things are bullish, if things are bearish, or maybe if things are probably going to be choppy. All right. Now, if price happens to cross VWAP 3 times before noon, 4 times before noon, it's a good chance you're in for a chop day, meaning that it's probably going to go back and forth over VWAP. All right. In other words, it'll look like a breakout, but it won't break out. It'll look like a breakdown, but it won't break down. And it'll just go back and forth over VWAP as it consolidates. Okay. So that's that chop that you see, that's going to be consolidation. The good news is, like, if you got tricked on the breakout because of the chop, all right, that eventually the consolidation is going to lead to either a breakout or a breakdown. Just want to be ready for it. If you're patient enough to sit on your hands and wait for that breakdown to happen, all right? So, again, when I see price crisscross back and forth over VWAP 3 or 4 times before noon, for me, it's a good it's a good rule for me. Not a rule, but there's a high probability that you're going to be in chop probably until about 2:30. Okay, usually the chop lasts till 2:30. Now, sometimes it lasts all day. All right, but most of the time, 2:30, there is some type of a breakout. Typically, right around 2:30, between 2 o'clock and 2:30. There's usually a nice little breakout, but sometimes it doesn't happen. All right, but you got to just watch for it and get ready for it. So there's SPY. I'm going to call it 10-minute bullish consolidation right there. Okay, so, and then I'm going to go over the 2-hour chart. All right, and I'm going to take this off. I'm going to take this off. Okay, so on the 2-hour chart, we got the 3 EMA, which is this yellow line right here. Okay, 3 EMA is underneath our 8 EMA, which is our white line. Okay, so we have space between the 3 and the 8. All right, and you can see we have a downtrend. Okay, you notice the candles continue to make lower lows. All right, and you can see the angle of trajectory for the 3 EMA. All right, is pointed down for the most part. You know, since it got up here, it spent most of its time either moving to the right or down. Now right here it did pop up. Okay, so now it's starting to pop up right here. But right now, 2 hour is in a downtrend when we left off on Friday. I don't know what it looks like this morning. I haven't looked at it yet, but you can see you've got the 3 is underneath. In other words, the faster moving average is underneath the slower moving average. So the 3 is under the 8, and you got space between the two of them. All right, so you can see price. So we got a 2 hour downtrend. 2 hour because we're on the 2 hour chart, and the 2 hour 3 EMA is underneath the 2 hour 8 EMA. And all three of them, the candles, the 3 and the 8, are all underneath. You can see these red dots, the 17 EMA. So we got ourselves a 2 hour downtrend. Okay. Now my favorite trade for a while was the 10-minute uptrend over VWAP that resides inside the 2 hour uptrend, that resides inside of a daily uptrend, that resides inside of a weekly uptrend, that resides inside of a monthly uptrend. That was my favorite trade. Okay, now we're getting some pullbacks. We're still bullish, all right, but we're getting some pullbacks, and I can see one of my favorite ETNs that I follow, or ETFs that I follow, which is the FNGU. It's kind of falling apart, all right? It's gotten close to breaking major support. Well, it did break some major support. It's heading on down to break some more major support. So I don't know if I'll ever see my favorite trade show up again. Hopefully it will, but we'll see what happens. But that is my favorite trade, okay? When I see 10-minute uptrend over VWAP, that resides inside of a 2 hour uptrend, that resides inside of a daily uptrend, inside a weekly uptrend, inside a monthly uptrend. Okay, and all of that is over the all-time high anchored VWAP. So let's go take a peek. Where is the all-time high anchored VWAP? All right, so this is the all-time high right there, that candle. So I come over here and I drag this. This is my anchored VWAP. See how it says A, and it's got a little anchor next to it. VWAP right there, volume weighted average price. So I grab one of those, smack it right down on top of there, okay? So you can see price now is under the all-time high anchored VWAP. Okay, again, I like it when I have all of this on top of that, okay? I like those 10-minute uptrends like that because you got all of the bigger time frames supporting that 10-minute uptrend. In other words, the 2 hours in an uptrend, it's not now, but when I have my favorite trade and my favorite trade triggers, you can see when you got that 2 hour uptrends, see how far price goes, see how those trends last longer. Okay, that right there was a 2 hour uptrend for SPY that was traded, all right, here in the BYOB room. All right, it was a 2 hour uptrend, and there was a 10-minute uptrend inside that 2 hour uptrend, and we trade those 10-minute uptrends inside the 2 hour uptrends, and the daily was also in an uptrend. So again, you can see this right here was where I had my favorite trade. Okay, not so much right now. We're getting kind of a pullback, and the FNGU is kind of falling apart. So we'll see what happens. Right now, 2 hour is in a downtrend. All right, currently as we left off. I don't know about right now, but like when we left off on Friday. Okay. 2 hour was in a downtrend. So look at the daily chart. All right, so on the daily candle up here, we've got a lower high. Yeah, we've got a lower high and we've got a lower low. All right, and it's a red candle, so we closed at the bottom of the body. All right, it's a red candle, so you closed at the bottom of the body. So you can see we closed underneath. If we zoom in here, all right, you can see the yellow line has now crossed under the white line. All right, so we closed under a bearish trap because the yellow line is under the white line on the daily chart. Okay, when it's over the white line, that's a bullish trap up there. So it's under a bearish trap, okay? And then it also closed, see the dots? Okay, this is the daily chart, okay? So we closed underneath the 17 EMA, okay? So we not only closed underneath the bearish trap, but we closed underneath the 17 EMA, okay? Now, did we make a lower low from the day before? Yes. In regards to this valley low right here, we've got a peak and a peak. Once we break this valley low, we'll be in a downtrend. Okay, currently we're in an uptrend that's not moving up on the daily chart. Okay, so it's the valleys that break below the 17 and the peaks that break above the 17. So currently we're still bullish. Okay, we're still in an uptrend. All right, and if we look at this with the quad lines on it, now this is our April low. This is the beginning of all of this rally that we're in right now. All right, and you can see we're up at the top of quadrant 4. Okay, so this is quadrant 1, 2, 3. We're up at the top of quadrant 4, so this is bullish up here. Okay, so we're at the top of quadrant 4, and we're in an uptrend. Okay, that's SPY, so we're still bullish. All right, things may not be acting bullish, all right, and they may be pulling back, but we are still up there in bullish territory. Okay, so on the weekly chart, we look at this, see all the green dots. Okay, we're still bullish and in an uptrend. Okay, see the 3 EMA is on top of the 8 EMA. The yellow line, the faster moving average, is over the slower one. Okay, again, the 8 EMA is over the 17. Okay, again, the faster moving average is over the slower one. Okay, so we're still bullish. We're still in an uptrend on the weekly chart. On the monthly chart, we got the same thing. All right, we've got the 3 EMA. It's up over the 8 EMA. And they're all up over the 17 EMA. See all the green dots? All right, so we're still bullish. There's our April low, right? So we're still bullish, and we're still in an uptrend. On the monthly, on the weekly, yep, even still on the daily. All right, we may not be moving up now. All right, we may be experiencing a pullback. All right, but once we break this valley low, all right, you can kind of see like an M pattern setting up here. All right, goes up, comes down. There's the valley of the M in between, okay, the two peaks of the M. Here's the second peak, and it looks like it's coming down here, all right, to cut below this valley. Once it gets below this valley, then it becomes a downtrend because at that point, price will have made a lower low, all right, on this daily chart. Right now, it's moved up and it's moving over to the right, okay? So it's experiencing a pullback in an uptrend, all right? So there's the daily chart, all right? So we are at the top of quadrant 4, and that's bullish. Anything in the upper third is bullish for me, okay? So we're at the top of quadrant 4, so we're bullish and in an uptrend on the daily chart right now. Okay, let's take a look at the game plan, and then we're going to go look at QQQ. So I look at the game plan on the 15-minute chart. I'm going to take the white line off. We don't need it right now. Okay, so this would be Friday's price action, all of this right through here. Okay, so I'm looking at price right now. My pivot, 682. All right, if you look at a big part of Friday's price action, all right, you can see a peak goes up. I'm on a 5-minute chart now. I'm looking at just Friday's price action. See a valley comes down and it stops right here. So in case you're wondering how I get my pivot, all right, so 682. Price comes down here and it stops. Price goes up here and it's into some resistance. See how it goes up and then it gets pushed back down right here. Okay, and then price goes up and it gets pushed back down again. Okay, so see how price comes down here and then it bounces. See how it bounces back up. All right, so that's how I get my pivot. I look for where a common denominator where price keeps coming back to this area. So you can see price came to this area and then bounced away. Okay, price shot through, came back, and then got pushed down. Came back through, tried to bounce off of this area, and then got pushed back down again. Finally, it was able to cut through, all right, and they rested, and they pulled back right there. Okay, so you can see that red candle right there kind of shows you that's where the important area is. So that's where I come up with my 682 pivot, is because price keeps coming back to this number. See how it held off here at this number on the previous day, came straight to this number after trying to make a higher high. Okay, and then it hit VWAP and came back down and tried to bounce up through it. Tried to bounce up through it, and that's how I get my pivot. It's the area where price keeps coming back to. All right, so price right here, we got some consolidation. So price over 683.90. That's a green erases red entry for me. Okay, green erases red entry is price above 683.90. If I see a 10-minute candle close up there, again, my pivot 682. I'll probably want to be a bull when I'm above it and a bear when I'm below it. See how being a bear when you're underneath it was beneficial. You got this 5 candle move to the downside. Okay, when you're underneath it, you got this, it looks like a 10 candle move to the downside. All right, when you're above it, all right, you got this 5 candle move to the upside. All right, when you're above it, you got this 3 candle move with bullish consolidation and obviously some follow through. Okay, when you're above it, that's what makes me say I'm a bull above it, below it, I'm a bear. Okay, so there's my green erases red entry, my pivot, and my red erases green entry. Okay, now we're going to go hit QQQ. Okay, because QQQ's got a game plan too. Okay, so for QQQ, okay, you've got green erases red. Okay, now a little bit different here today. Okay, you can see some consolidation right through here and some more consolidation right through there. So right between the two of them, okay, that would be resistance up there. Okay, so if we get over that, that would be resistance. That's where I probably want to be bullish up top there. Okay, want to be bullish up there. Now my pivot keeps moving around on me. Don't know why, but it just does. But it's supposed to be 614.60, which would be right about there. Right about there. Okay, so green erases red entry over 618.80. So in other words, if we get on top of this resistance, all right, and hold, I'm probably going to want to be a bull. All right, see that 618.80. I'll probably want to trade this to the upside to go challenge these peaks up here. Pivot, again, you can see where it wants to keep moving around on me, but I am persistent. Okay, so you can see where price comes to this area and bounces away. It comes to this area and bounces away. Price gets underneath it, tries to move up to it, but gets pushed down. All right, obviously found some support right through here and came right back to it right here. See how price keeps coming back to this 614.60 area. So that's what makes that my pivot. All right, now red erases green. Okay, that's where price happens to close candles over here. You have a upward move from here up to there and even then some. Okay, so we got to move. So if price were to erase everything that the bulls did, that would make it my red erases green. In other words, the bears come in and they erase everything that the bulls just accomplished. Okay, so then my red erases green entry is price below 610.75. Okay, so you can see there's a red erases green entry. I got my pivot, got my green erases red entry. Okay, now for all of you that are new here, okay, I provide this every single morning, a game plan. Okay, I'll zoom out so you can see what it looks like. Okay, this is my game plan, 15-minute chart. Let's pull this down. And let's widen this out. Squeeze it down a little bit. Okay, again, you can see my pivot here doesn't want to play nicely. All right, so that's my QQQ game plan. All right, I'm going to post it here in the free room pretty soon. All right, there's my QQQ game plan. All right, so I trade. All right, I trade 4 DTE options. Okay, now I'm a trader of price, but I use options. All right, I'm always trading the underlying security. Okay, it's always, everything is always all about the underlying security. I'm just using options to leverage my capital. That's it. That's all that options do. They leverage my capital. That's all I'm using them for. I'm not using them for insurance or as a defensive move to hedge, and I do use them for that sometimes, but most of the time when I'm trading options, it's strictly offense. All right, I'm just using them to leverage my capital when I see an uptrend. All right, so here's QQQ. This goes for QQQ and for SPY. Both of them have a game plan. They both say the same thing. All right, I trade 4 DTE and 11 DTE Friday options on the multiple of 5 specifically. All right, for the high open interest. All right, I like a lot of open interest. That provides a lot of liquidity. A lot of liquidity typically equates to a tight bid-ask spread. All right, I want to be able to get in and out with very little slippage. All right, I don't want a big wide $1.50 spread. All right, and that's why I trade the QQQ and the SPYs, because it's so heavily traded. All right, in this industry. All right, it's very heavily traded, so I typically get tight bid-ask spreads. In other words, sometimes they're a penny, 2 pennies, 3 pennies. All right, that's what I like. I don't want to. In order to get into something, I don't want to pay $1.50. All right, over the bid just to get into something. All right, because that chews up a lot of my profits. I like a tight bid-ask spread. Now I trade strikes. All right, $2 to $15 out of the money. Okay, I'm going to go back here. I'm going to backtrack just a little bit. Okay, I'm not opposed to trading 0 DTE options. Okay, just saying. All right, I'm not against trading 0 DTE options. All right, but typically when I'm first starting out an account, all right, or I'm first starting to trade, or I'm learning to trade, all right, the more time you have on your option, all right, the slower it's going to move. As you get closer and closer to the expiration date, the price decay will increase. The price movement will increase. Okay, so I typically trade strikes $2 to $15 out of the money. Again, I'm not opposed to trading 0 DTE or 1 DTE. Okay, I like, all right, the 4 DTE and the 11 DTE specifically for the high open interest. Okay, now I trade strikes that are $2 to $15 out of the money. Okay, I've only got $3,000 for my risk today. Okay, so I cannot be trading stocks that are trading, have an option or a call, all right, that's going to be $1 or $2 a share. Okay, because there's 100 shares in each contract. All right. So if I'm trading an option that's $2, all right, it's going to chew up a big part of my my max risk. All right. So I don't want to spend it all in one space, in one place. I want to be able to get a couple contracts. All right. Because I want to be able to, I might not hit the exact top. All right. I might like, oh, this looks pretty good. We're far and away from the 3 EMA. I think I will sell into strength here, and then it may keep running, and I won't have anything for it to keep running with. All right. Something like a trailer or some that just goes along for the ride. We'll see what happens. All right. But I like to be able to get more than just one contract. I like to be able to get 2 or 3 or 10. Now, if you trade, I'm not against trading in the money contracts, okay? I'm going to say this right now. In the money contracts will get much better performance than out of the money contracts, okay? You'll get much better. You'll get closer to penny for penny price action regarding the underlying security and the option value at the time, or the option, whatever the option's trading for. Okay, but you will wind up putting up a lot of risk, all right? Because if you get, like, let's just say this candle right here, it's not much, but that candle right there started, that's a 10-minute, that's a 15-minute candle. Okay, that started at 622, all right? And it closed down here at 619, okay? That's a $3 move. If you have 10 contracts that are in the money, all right, that will be close to $3,000 your account will dip, all right, because you've got 10 in the money contracts. For that reason, my contracts that are out of the money, all right, will be closer to 0, and they will not move as far, okay? Remember, I'm not getting the same performance, all right, as you will get. So it's a double-edged sword. If you're on the wrong side of the performance, okay, it can really hurt you. All right. So for that reason, when I'm first starting out, I start out with strikes that are out of the money. Again, I'm not opposed to trading in the money. All right. I just prefer them to be out of the money because I'm risking only 10% of my account. Okay, so my account, remember I shared it with you. Okay, so my account is $30K. I'm starting off with a new $30K account. So my max risk is 10%. That's only $3,000. Okay, so my daily goal is going to be $300. Okay, so I trade 10-minute uptrends over VWAP. Okay, so what is the 10-minute uptrend? Okay, this is a 10-minute downtrend. See the 3 EMA? It's underneath the 8 EMA. That is a 10-minute downtrend. And notice that 10-minute downtrend lasts from 617 clear down to 610, $7 move. That's a pretty nice move for a 10-minute downtrend. Okay? So this is a 10-minute downtrend under VWAP. See the brown line? That's volume weighted average price. That's the VWAP. VWAP starts out brand new every day. See how it jerked up here? All right. It starts out brand new. So see how price does do that. But I mean, see how the moving average, see how the lines jerk up there? Okay. So we start out brand new right up here with QQQ. Okay. So it's a 10-minute downtrend under VWAP. Okay. And I trade 10-minute uptrends over VWAP. Okay, so if we go over here, you'll see on the 10-minute chart, we'll go over here and we'll just take a look. You got a 3. It's over the white line. That's the 8 right there. Okay, so you can see, I'll zoom out and pan over. Okay, so here's a 10-minute uptrend. See the VWAP line, that's the brown line, over VWAP. Look at this one. 10-minute uptrend lasted, well, all the way until the end of the day. So there's a 10-minute uptrend over VWAP right there. And then look, another 10-minute uptrend over VWAP. Okay, so let's go back here just for a minute. Okay, now we're on the QQQ. Okay. I trade 10-minute uptrends over VWAP. I trade 10-minute downtrends under VWAP. Okay. If a 10-minute uptrend were to manifest down here, okay, I don't have to wait for the green erases red entry. I can trade the 10-minute uptrend that's down here. Okay, sometimes I trade a pullback to VWAP. Sometimes I trade a 10-minute uptrend that is a pullback to VWAP. Sometimes I trade a 10-minute uptrend over VWAP. I like to see a 10-minute uptrend over VWAP that broke the 10-minute bullish rubber band candle. Okay, so I'm looking for 10-minute uptrends. All right, so if one were to manifest down here, or down here, or down here, long before the green erases red entry up here, okay, I'm allowed to trade it. But I'd like to see it break the 10-minute bullish rubber band candle first. Okay, and I know there's going to be a lot of questions in the free room on what the rubber band candle is, how to find it, what does it look like. You know, I will teach you. All right, just stick around. I will teach you. So on the QQQ, if I get a 10-minute downtrend under VWAP, all right, I'm not opposed to trading that 10-minute downtrend, okay, long before it gets to my red erases green entry down here. Okay, I'm not opposed to trading it if it happens to manifest up here, in here, or right here. Okay, I'm not opposed to trading that 10-minute downtrend. Most times I like to see it break that bearish 10-minute rubber band candle. Okay, so there's QQQ on the 10-minute chart. Okay, they had a nice 10-minute downtrend that was tradable on the 2nd of January. All right, so on the 10-minute chart, QQQ was in, they left off with a, well, I'm going to call it a weak 1-candle downtrend or 2-candle downtrend. Because you can see the 3 EMA has crossed underneath the 8 right here. So I'm going to call it a weak 2-candle downtrend right there. Not very strong. It's only a couple candles strong right there. Okay, you can see and they're almost right here in the same consolidation level as all of the prior consolidation that they tried to trade over. Now notice the difference between QQQ and SPY. SPY was able to get above volume weighted average price. Now for me, volume weighted average price is the price that shares should be selling for. Okay, if people are willing to pay more than what they should be selling for, all right, then that's bullish on the day. If they're willing to pay less, okay, in other words, they're not even willing to buy them for what they should be selling for, that makes it bearish on the day, and you'll typically see price action and price candles below VWAP. Okay, so this is kind of like the equator. All right, right here. Above it, you kind of want to be bullish. Below it, you kind of want to be bearish. All right? This becomes like ground zero. Above it, bull. Below it, bear. Then you got the pivot. Above it, bull. Below that, bear. All right, so now 10-minute bearish or downtrend right there. Weak two candle downtrend on the 10-minute chart. On the 2-hour chart, let's go over here to a cleaner chart. Again, we've got the 3 EMA right here. Underneath the white 8 EMA right here. Underneath, see all the red dots? The falling 17. So we got a 2-hour downtrend. On the daily chart, okay, we've got an outside day. Okay, see how the previous day right here, this would be, I think that was the 31st, maybe 30th. All right, higher high lower low, all right, and we closed underneath the bearish trap, all right, because the 3 EMA is underneath the white EMA. So underneath a bearish trap and underneath the green dots turn to red underneath the 17 EMA. Okay, but we hit something, all right? We hit, see this line right here? We hit something here. We hit diagonal support. Okay, this is an uptrend line, all right? Otherwise known as diagonal support. See, while price comes into it and it bounces higher. Well, it bounces up. It doesn't necessarily bounce higher, but it does bounce up. Sometimes it's higher, sometimes it's not. Okay? Again, we hit the line again, all right, and we bounce higher. Okay? This time, see, it's not quite higher than the last one. Okay? So we're bouncing, all right? So we're getting a bounce. This is a continuation of the bounce that we started on the second, all right? So here's QQQ, and we'll turn on the pre-market, all right, on the 10-minute chart, okay? So we hit that line right here, and we're bouncing, all right? It's a pretty nice bounce, isn't it? You take it from 611, clear up to 617, and then some, all right? Nice bounce, all right? So we're bouncing right now. Like to get over this high right here, okay? Like to see us jump on top of that high right there. We'll see what happens. Think it's a tall order, but it could happen. We'll see what happens. But there's QQQ. Okay, so over this line here, okay, right about there. Okay, I don't usually count the wicks or the tails. Okay, so up over that, I'd probably want to be a bull. Okay, if price got up to there and started closing 10-minute candles up there, I definitely want to be bullish up top of that. Okay, because that'll be a breakout of this high. Now, if you look, price makes a higher low, all right? And from the higher low, they make a higher high. Now, we just had a pullback to make another higher low. Question is, are the bulls still inspired to make a higher high? Okay, so we'll see what happens. There's QQQ on the 10-minute chart. Okay, I'll go back to SPY. You can see SPY kind of got the same plan on the 15-minute, and I'll hit it right here. Okay, so you can see right there, SPY. Right? Again, 4 days till expiration, 11 days till expiration, Friday options on the multiple of 5. Again, I trade strikes $2 to $15 out of the money. All right? So there's SPY. Let's go take a look at some of the other products, all right, that I talked about earlier in the summary. Let's start with IWM. All right, we're going to pick it up over here. All right, and IWM, that is on, we want it on the daily chart. Okay, now IWM is the ticker for the Russell 2000. Okay, now the NASDAQ is called the NASDAQ 100. It means it's got about 100 securities that make up the NASDAQ 100. Okay, the S&P is called the S&P 500. It means it has about, sometimes more or less, some get kicked out because they can't maintain standards that are necessary to stay in the S&P or the NASDAQ, all right, and you wind up with a little bit less than 500, all right, but S&P is called the S&P 500, otherwise known as the SPY, that's the ETF, all right, so the Russell 2000, aka it has 2,000 stocks or 2,000 securities, roughly thereabouts. Some will probably get kicked out for failing to maintain standards that they agreed to maintain. All right, so this is This is the bigger one, all right? Notice, the NASDAQ's only got 100 securities, and it's mainly technology, mostly technology, mostly. Okay, the S&P is not mostly technology. It's kind of a broad mix that includes, let's just say, healthcare, financials, industrial, what else? Drug companies, and it includes tech, all right, and software as well, all right. So it's got a broader mix. Okay, Russell 2000 has 2,000, all right. Now the difference between IWM and SPY and QQQ, all right, SPY and QQQ have weighted their indexes according to some of the market cap. I don't know, but I don't think that the Russell 2000 does that. Okay, so in the SPY and the QQQ, you've got mega stocks or big cap stocks that are worth $2 trillion, $3 trillion, $4 trillion. Okay, so they get weighted differently. In other words, they carry more weight in the QQQ and the SPY, all right, which happens to make that index trade a little differently than the Russell 2000 because it's not weighting according to market cap. All right, so you've got a different momentum that happens in the IWM than what happens in the SPY and the QQQ. Now, when those top 10 stocks in the QQQ or the SPY, and they're pretty much the same ones, all right? The QQQ top 10 is not the same as the SPY top 10, but I think there's about 7 of them that are in the top 10 of both, okay, or 6 of them that are in the top 10 of both. But anyways, when those top 10, or call it top 12 or 12, when they start moving together as a pack, all right, they can drag the QQQ and the SPY right along with it, okay? And for that reason, I watch the Mag 7 or the FNGU because those have those top 7 securities that are in the QQQ and the SPY, which happen to drag those indices around, okay? So where if those move and the index is going to be dragged in their direction, it would be wise or prudent to follow what direction the pack of 7 or the the Mag 7 or the top 10 are moving at that time, all right? Because they have so much weight that they can oftentimes, it doesn't matter what the other securities are doing in the indexes, they could all be moving against them, but when they move, in their direction, they'll just drag the price right along with it. Okay, so here's IWM. Okay, it's got 2,000. You can see they had an outside day. That's a higher high and a lower low. They closed nice green candle inside a bearish trap, but still under the 17 and still the pink line under the all-time high anchored VWAP. Okay, now if we zoom way out, okay, and push this over just a little bit, you can see quadrant 1, 2, 3. We're in the middle of quadrant 4, so we're still bullish. Look how IWM maintained that upper third. Okay, see how it maintained the upper third. That's bullish for me. Okay, when they're maintained the lower third, okay, that's bearish for me. Okay, I just eyeball it. Okay, but that would be the upper third. That would be the lower third. Okay, in the middle, we're just neutral. So we're still bullish up here. Okay, but get this. Here's a low. We made a lower low. All right, so we're in a downtrend. All right, but we're still bullish up here. Okay, So still bullish. All right, bullish and in a downtrend currently. Okay, you can have a downtrend or a pullback. All right, they had a downtrend right here. See that? And they recovered and made a new all-time high. Okay, so they're in a downtrend because there's the low below the 17. Okay, there's the peak, and they came in and made a lower low, made a lower high, and then turned around and made a lower low that puts them in a downtrend. Now you notice QQQ and SPY are not in downtrends, but IWM got themselves into a downtrend. Now, in order for IWM to negate the downtrend, okay, they have to make a higher high. So there's the high that they have to beat. Okay, if they beat that high, they will negate the downtrend and convert the uptrend. It's much in the same way as they were in an uptrend until they made the lower low, which just happened 2 days ago. All right, and now they're trying to recover. All right, so there's IWM. So they're bullish, but in a downtrend. Diamond Dow. All right, Diamond Dow. All right, notice nothing below the 17 till you get to right here. Okay, so they got to take out this low in order to create a downtrend. Currently, Diamond Dow put in an outside day. That's a higher high and a lower low. They closed over a bearish trap. They closed over, see the green dots, the flat 17 EMA. They closed at the top of quadrant 4. If you look at the pink line here, they closed over. This is the all-time high anchored VWAP up here. Okay? So that's bullish. See at the top of quadrant 4. Here's our April low. That's bullish and in an uptrend. Diamond Dow. Okay, let's take a look at FNGU. All right, now FNGU is got 10 of the most heavily weighted securities in QQQ and SPY. It's the one we follow. And notice here's some consolidation here. If we break below this, I'm going to tell you things could start getting ugly real fast. I mean, when I say ugly, I'm talking SPY 550, SPY 500, SPY 600. I mean, like really, really ugly, okay? This is FNGU on the daily chart. Okay, if we get below this green line right through here. Now you notice we came through and challenged it on Friday. All right? They're not bouncing away. They should be, but they're not. Okay? Because this is the big boys, all of these guys. So the candle for FNGU was another outside day. It's a higher high and a lower low. We closed underneath a bearish trap. Closed underneath, see the red dots, the falling 17. We closed, this is the all-time high, the pink line. Underneath, okay, the all-time high anchored VWAP. All right, we made a lower low, so we're definitely in a downtrend again. All right, see how we made a lower high and we inked out a lower low. We made another lower high, but we didn't go over the 17. And we inked out a lower low down here on Friday. So there's FNGU on the daily chart. Okay, so price not looking good for the heavyweights in the FNGU. Here's the ETN, okay? So this is FNGU. I can go over that with you later if to discuss who's in the FNGU. I just want to get through this right now so we can open up the market. So there's open up the room and begin to trade here. So there's FNGU, all right, in jeopardy of, there's the April low coming down to visit that April low. Okay, definitely don't want to see that. Okay, so there's FNGU on the daily chart. Okay, notice they're not. I'm going to move a lot of this stuff out of here. Actually, I'm just going to go to a different chart. Okay, and then I'm going to stick my quad lines in so you can see them clearly. Okay, so you notice we're not in the upper third. So we're just neutral. We're not bearish. Okay, bearish would be down here in the lower third. This is just neutral. We're not bullish up here. And we're definitely not in an uptrend after making lower highs. See the lower high and a lower low, a lower high, another lower low, another lower high, and again another lower low. All right, so you can see we're neutral, all right, and in a downtrend on FNGU. Now this is the heavyweight that typically when they move as a pack, they can drag those two indexes, the SPY and the QQQ, right along with them. So currently in the market, we got a little uptrend going on in the pre-market. So it'll be interesting what happens today. So there's FNGU. All right, let's take a look at silver and gold. So here's silver. Again, we'll start back here. Okay, now see, here is our 2022 low. This is the origin of this rally. Starts in 2022. Okay, there's the low. And you can see 2-3 days ago, we made a new all-time high right there. So this is SLV. And on Friday's price candle, we got a higher low and a higher high. We closed inside of a bullish trap because the 3 is on top of the 8. Closed over the rising 17. We're even gapping up a little bit more this morning. You can see prices up here. So they're still moving up. So we're bullish, okay? All right, because we haven't made any lower lows. First low you come to underneath the 17 is all the way back here at the midpoint. So we're bullish, top of quadrant 4. Again, okay, see, here's quadrant 1, 2, 3. Top of quadrant 4, we're bullish and in an uptrend on silver. Let's take a look at gold. Okay, gold got higher low and a higher high, closing under a bearish trap, under the flat 17. See how the green dots turn to red. We're at the top of quadrant 4. There's the all-time high. Okay, this is the 2022 low right here, 2022 low right here. This is the origin of the move up. Okay, so price is at the top of quadrant 4, so it's bullish, all right, and still in an uptrend, all right? Bullish in an uptrend on gold. UNG. Now UNG, you look at UNG, here's the quad lines, there's the high. 2025 high is up there. Notice we're under that 2025 high. This is the all-time low. I mean all-time low for UNG. That's not gas ETF. That's the all-time low right there. And you can clearly see we're in the lower third. So we're bearish. All right. And we haven't made a higher high because we would have to take out that high up there to get bullish or be in an uptrend. All right. And so we're still in a downtrend. Friday's price candles, a lower high, a lower low, closing under a bearish trap under the 17 EMA. Okay. This is a double bottom for you bottom pickers. All right. That was the all-time low right there. All right. Then they came into the neutral zone and then they just made the new all-time low right here. So that would be a double bottom. If you're a bottom picker, you can see price today, just want to show this to you, is making a new all-time low. See, this is where price is right now. There's the double bottom. This would be a triple bottom right here. Okay, today. Right after that. So if you're a bottom picker, here's your triple bottom. You could see it pop up if you're a bottom picker. Or you can just wait for the uptrend, okay? I don't pick tops and bottoms. All right, I'm not any good at it. I am very good at what I do, and what I do is trade the trend. Okay, I'm very good at trading the trend. Okay, I'm not any good at picking tops and bottoms, but if you're a great bottom picker, all right, I'm just saying, there's a triple bottom right there for you on UNG. All right, so that's underneath this all-time, excuse me, not the all-time high, but the 2025 high anchored VWAP right up there. Okay, so that's bearish and in a downtrend. Obviously, it's going to make a new all-time low today. All right, USO. All right, for USO, we got a lower high, lower low. We closed under a bearish cross. All right, because the 3 is crossing under the 8, closing under the kind of fading 17. Here's a green line. You can obviously see that this is a downtrend line. This is known as a downtrend line or diagonal resistance. Notice price comes into it and gets pushed down. Comes into it and gets pushed down. Comes near it, and every time it gets near it, there's like, the Death Star. It's got this magnetic ray that just pushes it down. All right, so there's USO. Lower high, lower low, closing underneath the bearish cross, underneath the 17, underneath the downtrend line, underneath the 2022 high anchored VWAP right there. Okay. We're not in the lower third, so we're just neutral, but in a downtrend. We haven't made a higher high yet. Okay, so we're neutral and in a downtrend. All right, let's take a look at technicals, T2101. This is market breadth and participation. Okay, the market moved down a little bit lower on Friday, and you can see the breadth increased. Something I did not want to see. All right, I don't like it. I like to see the breadth increase when price moves up. T2122 price price action here. This is the seller's chop zone, the buyer's chop zone. So we moved out of the sell zone, all right, into the seller's chop zone. That's a bullish move right there. Okay, so that's again, this is not weighting the securities. So this is telling me that if you eliminate the highly weighted securities, the market is the flow of money is into the market as opposed to out of the market. Okay, if you took out those top 10 heavyweights, you can see money is now flowing into it. All right. Now you only know it's flowing in when it gets up over the midpoint and in the buyer's chop zone, in the buy zone, and in the overbought zone. But this was the result on the 2nd of the year, the beginning of the year. Okay, and you can obviously see money was flowing in to the market as being opposed to being taken out. Okay, so I would expect a continuation of that motion of more money coming into the market these first few days of the market being open this year. Okay, this is T2122. Make a note of that. See that? Money flowing in, because you can see the 4-week new high, new low goes higher on the 2nd. Okay, on the 31st, not so much, right? On the 30th, coming down, not so much. But on the 2nd, money starts flowing back in. Okay, so there's T2122, T2123. We had consolidation right through here. And then we had consolidation over prior consolidation, that was bullish. More consolidation over prior consolidation, that was bullish. Let's see what we got for the 2nd. It was a gap down, and the bulls came in finally at the end of the day and filled the gap. Okay, so, but all in all, we're in an uptrend on the 15-minute chart because there's a high, and we made a higher high. Okay, so there's a higher low and we made a higher high. So we'll see if we can get some continuation to that uptrend. Okay, if we look at this right here, I'm going to just capture all of it together. Okay, and price moves from this low up to this high. So I'm going to draw a line. Okay, up to there. That's a bull flag. Okay, it looks like it's falling apart based on the end of the year performance right there, but that is still a bull flag. Okay, so I'm still bullish because I still see price move from a low to a high and then consolidate holding the highs. Okay, when I look at price action, I look at what it's doing. All right, for me, it's all about what it's doing. And the idea that it's holding these highs is a show of strength. That's like planking, all right, for 15 days straight, okay? For those of you that exercise, you know what it's like to hold a plank for a while, okay? So that's like planking for 3 hours straight, okay? It's incredibly hard to do, and that's what they're doing. They're holding the highs. I like to see price move up, okay? Move up, and then hold the higher ground. Okay? That's a bullish stance for me. When price moves up, okay, and then gives it up, okay, that's just neutral. Okay, but when it goes up and it holds the higher ground, that's an eye catcher. That's what I want to see. And we got 15 minute T2123 is moving up and holding that higher ground. I don't like that they're under the 200 SMA. All right. I don't like that they dipped down, had a bearish gap, and then had to get it filled by the bulls. Don't like that. But they are still holding this latitude, this plank that they have going on right through here. Okay. So that's still bullish for me. Okay. So you got a gap down, and it never got filled by the bulls. That one right there. This one, gap down, got filled by the bulls. Okay, need to see if they can keep that going. So that's T2123. We're in an uptrend after dipping low here. We'll see what happens. 3-bar chart, we're still up over the 200 SMA. That's bullish. We're at the top. Here's our April low. We're at the middle of quadrant 4, so we're bullish, and we're still in an uptrend. There's a high. We made higher highs. Okay, so we're still bullish, still in an uptrend. Okay, FNGU. Again, you can see there's the green line that represents all of that prior consolidation. I don't know if I can get over there. No, guess not. Over to the left. Okay, so we don't need to break below that. Notice on the 15-minute chart, we're underneath the 200 SMA. We're under the pink line. That's the all-time high anchored VWAP. We're under what once was major support right there. And we're under, again, we made a lower high and a lower low, reinforcing the downtrend. So not looking good for the big caps right here on 15-minute chart. We'll see what happens here. So 15-minute is, let's see where we left off. Well, we got a low right here. We made a lower low. So we're still got higher lows here. This is where we left off. No higher high yet, but in the post market we made it. So got a little uptrend going on the FNGU. So I like that. Like to see him climb on top of the 200. You know, show me something. But underneath the 200, again, not my favorite place to be unless I'm a bear. All right, so there's FNGU. So we're getting some conflicts. All right, we've got, the big caps are in a downtrend, but the rest of the market is kind of still bullish, still holding on to the uptrend. All right, so a little bit of conflict going on right now. All right, so we're going to trade the market open. Let's go back to SPY. I'm just going to touch on this for a quick second. right here. I'm going to go to the US dollar. Okay, so you can see US dollar moves from this high down to this low and then over to the right. So this is a bear flag. So down and over to the right. See the move down, this is 2025 high, down and over to the right. So this is a bear flag, yep. All right, now currently, price, all right, is in a downtrend. It was in an uptrend. They got a low right here. They made a lower low, a lower high, and another lower low. So that's a downtrend, lower high, lower low. See the low? We made lower lows. So we're in a downtrend. There's a high, all right, and they made a higher high. So as of today's candle, this is today's candle, we're in an uptrend again. So they just negated the downtrend. All right, so strength coming back into the dollar. Now, as consumers, all right, we like a strong dollar. All right, because then our dollar goes further. All right, when we got a weak dollar, it takes more of our dollars to buy the goods and services that we need to survive. Okay, so we like a strong dollar. But as investors or traders, we like a weak dollar because it makes the markets go higher. Because what happens is when we trade, when we go to sell our goods and services, not just in the USA, but overseas or out of the country, all right, they have to convert their currency into our currency in order to pay us. So when we have a strong dollar, what happens is it takes more of their currency to pay us. And unfortunately, sometimes it's not worth buying from the USA because it costs so darn much of their money in order to buy those goods and services. Now, if it's something that they can't do without, then they're kind of forced to buy it. But if they can go shop around for something like, I don't know, metal pans, all right, because everybody makes a metal pan, not just in the USA, but China, Japan, everybody makes a metal pan to cook with, all right? So they can shop around. It might not be best to buy the metal pans coming out of America, all right, because it just costs too darn much to buy, all right? So what happens is when we got a weak dollar, it makes us more competitive globally, and we wind up selling more. That's why we had nice GDP, because we have a weak dollar, 4.3 GDP. All right, that's pretty high GDP, really, 4.3. All right, that's a lot of selling of American goods and services overseas. All right, when we sell more American goods and services overseas, what that means, all right, what that really means is you're going to see more revenue come into the top line, all right? When more revenue comes into the top line, that usually, if management's got its act together, transcends down to the bottom line, and then you get more earnings per share. Now, more earnings per share means you're going to be worth, your stock is going to be worth more. Your company is worth more because it makes more profits per year. So you're going to get a lot more demand for your product or for your stock, all right, when you sell more, when you have revenue growth or profits growth. That's what people look for, is growth, all right? And when you see that, you can see that, oh, well, we're getting more of the market share, and now we're going to get a higher multiple, and you tend to see the stock prices rise. So as investors, we like a weak dollar, but the consumer in us, it sucks because it costs us more money, more of our hard-earned money to buy the same goods and services that we bought last year. Max Payne, this is for the options that expired today, the puts and calls, only for the SPY, is 683 with about 0.8 puts for each call. So there's no put squeeze. All right, you can see Max Payne is 683. Economic calendar for today, ISM Manufacturing Index comes out at 10. Motor vehicle sales came out earlier today. I don't know what happened with that. Tuesday, we've got PMI composite final at 9:45, and then that's it. Factory orders 10 o'clock on Wednesday, and I'll cover the rest of it later on. All right. Earnings. I think earnings season is over. Nothing but familiar names, Barnes and Nobles. All right. But nothing here that's going to move the markets. Okay, again, familiar names. Nothing that's going to move the markets. All right. Nothing big yet. Okay, see that? So earnings is out of the picture for right now until we get a new quarter of earnings. All right, so we'll see what happens with that. All right. Going to trade the market here live. All right, so we're coming back to SPY. That's my favorite. Let me put this back, FNGU. All right, going to come back to right here. I want the SPY. All right, I'm going to go to my 10-minute chart. I want the pre-market activity on it. Actually going to go to my 5-minute chart. Okay. Like I said, we have consolidation over prior consolidation. That's a bullish outlook. Okay? Remember when I said when I see price break out over this, I want to be bullish. Okay? I even gave you the line first thing in the video. All right? Want to be bullish. Now price is over. See this pink line, the all-time high anchored VWAP. Okay, now let's go take a look at, we obviously got a 10-minute uptrend. If we look at the 10-minute chart, the 3 is on top of the 8. Okay, the 8 is on top of the 17. You can see the 17, the 8, the 3, the candlesticks, all 4 of them are over the brown line, the anchored VWAP, the regular VWAP. They're over the anchored VWAP, which is the purple line or the pink line up here. That's bullish. Okay? They broke out of the consolidation. Here's the breakout right here. All right? So that's all bullish right there. I said my entry would be right there as price comes up over the top of that consolidation right there. This is bullish. Okay, now let's look to the left. See the tweezer tops? That's telling me there were sellers in this area before. All right, we'll see what happens. All right, if they can get on top of the tweezer tops and hold that area, that would be very bullish. If they can get on top and keep moving up, that would be very bullish. Remember, we're bouncing off of that support area. All right, so I don't know how far we're going to bounce. We could bounce all the way up and make a new all-time high today. Okay, but we got to get through. This is the next level to get through. All of this consolidation right there, okay? All of this is the consolidation. Okay, that's what caused the tweezer tops, was this resistance right here, caused this tweezer top right here. So we're getting back to the same area. If we can climb up there and hold the higher ground, remember I talk about holding the higher ground. If we can hold the higher ground up there, that would be a very bullish outlook for tomorrow and the closing hours of the day. All right, again, we have to get up there and hold the higher ground. We'll see what we get. All right, right now we got an igniting move up. All right, let's see if we get some follow through or if we can hold the higher ground. All right, remember there were sellers here before. It would be normal for it to sell off back to the support area and test either the minor support or the major support of this little bit of consolidation right through here. We'll see what happens. All right. So there's 10 minute. 10 minute is in a pre-market uptrend. On the 2 hour, okay, I'm going to move the boxes out of the way. Okay, on the 2 hour, in the pre-market, you have a 2 hour uptrend. Okay, you see the 3? Okay, was underneath the ADMA before. Now it is above. So we have a 2-hour uptrend. We have a 10-minute uptrend. We have a daily uptrend. We have a weekly uptrend. We have a monthly uptrend. Okay? And guess what? We're over the pink line, the all-time high anchored VWAP. Okay, this is my favorite trade. I was spelling it out earlier today. This is my favorite trade. Is the 10-minute uptrend over VWAP that resides inside the 2-hour uptrend, that lives inside the daily uptrend, inside the weekly uptrend, inside the monthly uptrend. Okay, that is my favorite trade. It has activated as of right now. All right, so there's SPY. We'll see what happens here. So I'm going to be bullish, so I'm going to look. Let me just change this. Let me make up a new one. Okay, so I'm going to go look for some calls because I want to trade some calls. All right, so I'm coming back to the 10. I got a 10-minute uptrend. All right, we're about to open up. I want a market order for some calls, so I want some 690 calls on the SPY. So I'm going to go to 690, 0 DTE. All right, those are 40. I'm going to take some 690 calls and I'm going to buy some at market. All right. So I'm going to buy I'm going to buy 5 at market. Okay, the market's opening up. $6.90 calls. I still haven't got filled. I'm going to tell you, TC2000 has been having troubles filling my orders, but I like the 690 calls. You can see they opened up right here at 11 cents. They're already up to 7. All right. There's a 10-minute uptrend. God bless you. All right, so this is my underlying security candle. Okay, this is the candle for the SPY. This is the candle, all right, this is the candle for the option. All right, right there. That's the candle for the option. Now I have $3,000 to spend. All right. And so far, my cost basis is 60. Okay? I've only spent 60 of my 3,000. All right? My goal, again, is to make 300. We'll see what happens. So I just took my profit. Now I'm going to buy the pullback. Okay, took my profit. I'm going to buy the pullback. So I spread out a net underneath. and I try to capture price as it drops. All right, so here's my net of buy orders. So when price drops, it triggers me in. Okay, I'm still bullish. And then I will set up a net of sell orders up top. So I hope you all understand why I bought calls. I bought calls because the market's in an uptrend. All right. I bought calls because I want to leverage my money. All right. I want to leverage my capital because it would cost me a lot to buy. Well, I had 5 of them. It would cost me a lot to buy 500 shares at $600 a pop. All right. Or $700, nearly $700 a share. Okay. It would cost me way too much. I only have $30,000, but I'm not even using the 30,000. I'm using 10%. So I'm using 10% of that. So that's $3,000. So it would be impossible for me to buy, again, 500 shares because I had 5 contracts, 100 shares each contract. That makes it 500 times 687, 690. Okay, it'd be impossible for me to buy that. That makes it. You see what I'm saying? So, I use the options to leverage my capital. Okay, so got a continuation of the 10-minute uptrend. We had bullish consolidation, and we had a breakout. So I'm going to trade the continuation. We'll see what it wants to do. If it wants to dip, it wants to dip. I just have to let it do its thing. But I'm going to stay with the trend. I'm going to stay with the trend until it ends. All right? That's my rule that I try to live by. I'm going to stay to the trend with the trend till this trend ends. See that big candle? I'm going to take profit into strength. Okay, so I'm going to put out, remember I had a net of buy orders. My 10-minute trend is active. I will spread out a net of sell orders up top. Okay, so I'm going to start to spread out a net of sell orders right over the top of my cost basis. Now, remember what I said. Remember the tweezer top up here. Okay, it's imperative we get on top of the tweezer top and hold the higher ground. See the tweezer top? We need to get up here and hold this area. Otherwise, we could get pushed back down. We'll see what happens. I have a 10-minute breakout. I will give it every chance that I can to let it work. Another green candle on the 10-minute chart. So we're trading a 10-minute continuation. All right. A 10-minute uptrend continuation. That's what I'm trading. You can see my net sell orders up above, my cost basis, my net of buy orders underneath, my cost basis. These are my positions over here. This is the position I have. 13 contracts, 0 days till expiration, 690 strike. Okay? Remember, my goal is $300. So far, I captured 85. That's my real P&L. That's my unreal P&L. These are profits not taken. These are profits already taken. Okay, I'm looking to sell into strength up here. When price gets up here in the red box, I'm looking to sell into strength up there. My 10-minute uptrend is still active. My 10-minute trend still active. So I'm spreading out a net of sell orders and a net of buy orders. I stay with the trend. So every time I sell a contract or a couple contracts, I get a red dot. Every time I buy a contract or multiple contracts, I get a blue dot. So you can see the buys and the sells. See, selling into strength, selling into strength, buying, okay, the dips as long as the 10-minute uptrend continues. I stay with the trend. Okay, I stay with the trend till it ends. Three EMA on top of 8 EMA. All riding over rising 17 EMA. Okay, so this is kind of what we do every morning. We snatch a daily goal. Some of us stick around to trade the rest of the day. Some of us go off and enjoy our life. All right? I'm just saying, like, I see a lot of traders stick around and they try to trade the rest of the day and they wind up giving all of this back. All right? You got your daily goal. All right? 1%. All you got to do is 1% every day for 70 days and you will have doubled your account. Again, I see a lot of people give it back trying to trade after 12:30. Yep, knowing when to stop is important. Like, I'm just saying, like, you can stop now. You can keep going. It's up to you. But if you find that you give back all of your gains in the afternoon, really, really, really think about cutting those out. All right, now if you look right here, we bought these for 13 cents a share. Okay, that's our entry. And you can see we were selling them for, not all of them, but some of them for 26, 27, 28, 29 cents a share. Now that's 100% gain. All right? 13 cents times 2 is 26. That's 100% inside of what? 60 minutes. Okay? Now you didn't have to give it up here. You could have waited for that, but you never know if you're going to get that. So for me, I take it whenever I can get it. Whenever I see profits and I see the uptrend, I try to snatch my profits, and I'm willing to reload on any dips in these candles sometimes. So you got a nice, beautiful 10-minute uptrend. This thing is looking fantastic. Let's go look over to the left and see what's over there to see what we're going to run into next. Obviously, we've got Woody's pivot. I'm going to check with Tex. Tex says Woody's pivot R1 690.07. Okay, so there's Woody's pivot 690.07. So we're $1.50 away from R1. Max Gex is, according to Tex, is 690. You can take a peek at Max Gex right now. I actually do have it right here. We'll see what we get. And I got to sign in. Okay, you can see the big candle right there, or the big bar, all sitting on 690. So that's that looks like 690 plus or minus 50 cents. Okay, so anywhere from 689.50 on up to 690.50. All right, that's our Max Gex. That's the gamma exposure for the dealers that are dealing with the 0 DTE options. Okay, so if you're wondering what that is. Okay, so we're going to pull this down. We already see where Max Gex is. All right, we see where Woody's pivot, 690. Still got the 10-minute, still got that beautiful 10-minute uptrend. Don't know when it's going to end. Here's a nice little pullback. I think I'll reload some here. All right, not many. Again, I don't want to give back everything I earned. Okay. Paul, Trendicator, Trendicator happens to be 17 exponential. I believe. Is that right? Ed Carter? Is Trendicator the 8 EMA or the 17? I don't know why I have it as 17. I thought it was the 8. 17. Okay, so the 17 is currently, Paul, currently at 686.90. 686.90 is currently. So obviously I'm going to make more than my 1%, which means I won't have to wait 70 days. I'm actually going to get there faster than 70 days. But I mean, if you want a good trading day, you find a nice trend, and typically you can trade that nice trend right on up to 11:30, and then you can just enjoy the rest of your day. It's pretty often you just have to find the trend. In order to find trend, 10-minute chart, 3 EMA, 8 EMA, where they pointed, they're both pointed up. Okay, we came in this morning, we had a bullish bias right here, and we had a bullish bias because we saw consolidation, okay, right here, over consolidation. So here's the post-market consolidation. Here's our pre-market consolidation right there. So we had a bullish bias because that's a bullish environment. Whenever you see consolidation over prior consolidation, bullish environment right there. Okay, so I'm looking for an uptrend. I don't know when I'm going to get it. All right, but I'm gonna be scouting for it, and I'm going to be looking for it, and I'm going to be hunting for it to happen. And I can start on the 3 or the 5 or the 10, okay, or I can even go to the 15. All right, but it's probably going to manifest on the 3 and the 5 long before it manifests on the 10 and the 15. All right, now remember, even though it manifests on the 3 and the 5, they're not as strong as the 10 and the 15, because the 10 and the 15 encompasses more time. All right, it's bigger, it's bolder. All right, it's got more horsepower. All right, so your 15 minutes, it's the same way as I look at the daily. The daily's in an uptrend. I looked at the 2 hour. The 2 hour was in an uptrend. The daily's in an uptrend. The weekly, okay? You got those bigger time frames supporting that 10-minute uptrend. Do I expect a pullback to VWAP? Yes. We may get a trend day. All right, we'll see. But a trend day happens to be when price action remains in a 10-minute uptrend between the hours over VWAP. It's got to be over VWAP. And it has to break some resistance, which it did. All right. And it's between the hours of 11 a.m. and noon. All right. Typically, when you get a nice trend day, okay, what you'll get is price will continue to stay in a 10-minute uptrend till 2 or 2:30 most of the time, 70% of the time. And 30% of the time, it will finish at the end of the day near the high of the day. Okay, in other words, it will close bullishly at the end of the day, right up where the high is. All right, and that's a good sign for the following day to have more continuation of that uptrend. So we'll see what happens. But things are looking good. All right, you see how you got green erases the red candle here. Okay, so you want to know, if you want to know what a green erases red situation looks like, okay? Because I teach this in the BYOB Trading Room, is the green erases red. Okay, before we get into that, okay, you got the consolidation that we observed this morning. Okay, so notice we've got a gap up, not filled by the bears. That's an incredibly bullish environment as well. All right, and before this had shown up, I said to traders, if you go back to the beginning of the video right here, now you can see I said I put a line right here that this right over that line is where I want to be bullish. Right over the top of that line, I put a line right there early this morning. I said, because I showed traders that this was the morning consolidation over the prior consolidation, okay? Morning consolidation. So as soon as we break out of that, that's where I want to be bullish. Okay, now if you look at this, where's the green erases red? Well, you take this high right here, okay, and you draw a box around it. So we'll draw a red box around that high, okay, and we'll drag it down to the low. So price pull back from this high down to, all right, let's just say this low right here. All right, actually not quite that big, but let's try it one more time. And right down to that low right there. Okay, so now where's the green erases red? Okay, so now we take the green. All right, now the green takes it from this low. All right, it's where I teach my traders in BYOB. All right up to this high up here. Okay, so where does the green erase the red? I put an arrow right there. Okay, so right there, green erases red. See, right over the top of the red, from the high to the pullback low. Okay, and then the green comes in and erases it. There's your entry right there. Okay, nice, beautiful 10-minute up. If you didn't like this entry right here, you got another one right here. You got a green erases red right there. Okay, pull back from the high to the low. The green candles come in and erase everything that the bears pulled back. Okay, so you got a green erases red entry right here. Okay, if you didn't like this one that comes right up over the top of those candle bodies. All right, so you got a beautiful 10-minute uptrend right there. And you stay with the trend. I said it early this morning. I will stay with the trend until it ends. Okay, I'm going to stay with this 10-minute uptrend. We'll see. Okay. Things are looking kind of shady right now. Okay. Looking like we may get a bearish engulfing here. We'll see. Hopefully we just consolidate and move over to the right. It would be normal for price to pull back and tap that tweezer top and then bounce back up. We'll see what they want to do. All right, they went a little bit too far for me, but I'll take it. I'll take it. This is a nice little run. You know, I'm not. The whole thing is I don't want to give up my profits. Okay, I've already captured this. I'm very happy. Okay, so this is nice. I like that. All right, I'd like to see it move to the right. All right. Probably due for a 3-candle pullback anytime soon. We'll see what happens. Yeah, it will break the all-time high up here. Yes. The all-time high, Angel, is right there, 691.72. It's pretty close. You can see we're see all of this consolidation right here. Okay, I'm just going to drag it over. Okay. So you see how we see those wicks up there? We just tap those wicks. Now, when I see wicks like that, that's sellers, sellers, sellers. Whenever I see wicks, sellers were there. See, now there was sellers here, but notice we climbed on top of them and we kept going up. So now we're running into some sellers again. We'll see what happens, okay? Getting a little consolidation. That's a good sign that price is consolidating up here. Like to see it just move to the right. All right, I'm bullish. My 10-minute trend is still intact. It's still looking good. I'm still bullish. See, this is what I look for. See the 8 EMA and the VWAP line. Okay? See how the mouth of the 8 EMA and the VWAP line continues to grow wider and wider. Open up, larger and larger. So I'm up here. This is Rick. He runs the swing trading, and he's got this cool little calendar. Okay? Okay, so it's called the Double Your Money calendar. Beautiful creation. So we're going to go to the Double Your Money calendar. So you can see I started out with 30K this morning. You can see how much I made right there. I started out with 30K. Remember, my goal was $300. That's 1% of 30K. So we're gonna punch this in. 30K, okay? All right. Required profit per day is 23. All right. Position size is 10%. Not sure why that's not working. Oh, he's got it. There it is. Okay, so required profit per day. All right, to double your money in a year. This is to double your money in a year. All right. I'm teaching you how to do it in 70 days. All right, that's why. Okay, so how long will it take to double my money if I increase the balance by 1% each day? All right, let's go check this out. I've never done this, so I don't know what it's going to turn up. Okay, so here it is. This is Gemini AI, I think. All right, I'm not sure if it's Gemini, but yeah, it's Gemini right here, Gemini 3. Okay, so they're saying it will take 70 days to double your money if you increase by 1% every day, each day. Okay, now remember, Saturday and Sunday were closed. Okay, all right, and then there's some holidays in there, but if you can do 1% each day, okay, after what, I don't know how many weeks, okay, you can have your money doubled. Now, I have several accounts that I've doubled my money, tripled my money here on this. This was the last one. Okay, started out with 30K. Of course, I got really aggressive, all right, but stayed within the parameters in through here. But you can see this is prior to Christmas. That's a 4X. Okay, started with 30. All right, just before Christmas, ended up with 111, 112, not quite 4x, 3x, 3x the money. Okay. After Christmas, 4x right here, 126. Okay, so again, you look at what I trade for risk. It's not very much, but I'm picky about what I want to trade, and I'm picky about what I'm looking for, and it's just from experience, knowing that this is a bullish environment. Okay, consolidating over prior. Then I see the breakout. Here's the 10-minute trend. So I'm going to stick with that 10-minute trend right up there and continue to trade that throughout that. So just kind of stick with it and see what happens. And lo and behold, wind up making 1%, just like that. All right, all by 1 hour of trading. That's 1 hour of trading. That's not too bad. That's pretty quick. And you can see on some of those options, I'm making close to 100%. All right, but that's me. I've been doing this for a while. Okay, but there's a big difference. Okay, I don't waste a lot of time, okay, looking at stocks, okay, like all of this stuff and all of this stuff. I look it up for people that like to swing trade, but I don't trade any of this stuff. Okay, I trade this one and this one. And I trade it so often that I'm familiar with what to expect out of it most of the time. I know when things look right, and I know when things look kind of shady. All right, so I'm looking at this and I'm looking at that. Okay, between these two, I can make a living just trading these two without picking up a scanner or scanning for stocks or trying to find the support and the resistance. I just trade these two. That's it. Those two. Occasionally, I'll trade some silver and gold. All right. Occasionally, maybe some silver, some gold. But most of my trades are either SPY options, QQQ options. For the most part, that's it. SPY options and QQQ options. All right, so you can see I'm not wasting, and it's not a waste, okay, of time. It's just not consuming a lot of my mental, how do I say it? It's not consuming a lot of my mental awareness, all right, by looking for the support, the resistance, the trend line in all of those, because I'm familiar with this. I know where it left off with on Friday. I know what I'm looking at for today. So it's very easy. When you condense your universe of stocks that you trade, and I mean, you could just go to, let me just say, you could just condense your universe into like Amazon, Microsoft, Tesla, Google, Meta, AVGO, NVIDIA. I mean, if you just tightened up your universe into like probably 5 or 10 securities that are very popular and very often traded, okay? You'd be surprised, instead of looking for, somebody's, therapeutics that, that did a lot like that. You began looking at the TQQQs. Yes, 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 yes. But if but I mean, you noticed, Sharon, that if you just focus on maybe just a couple or a handful of products, it becomes easier and things become clearer. Yeah, you look at too many shiny objects. Exactly. And that can be distracting. And if one of them goes wrong, it can kind of mess with your mentality. You kind of like feel like you lost your mojo. But you really didn't. It's just that's the nature of that shiny object. And so I keep it real simple, okay? I trade a couple of products. I look for things that I can identify. 10-minute uptrends. Green erases red. Consolidation over prior consolidation. Okay? I just look for things that are familiar. And it makes it really easy for me to just ink out my 1%. Now, you can see from my spreadsheet, okay, sometimes I do much better than 1%, Like this day, that was 10%, okay? This day, like almost another 10% right there. I mean, when you start doing 10% a day, you find yourself able to double your account, almost at the end of a couple weeks. You can see on week 2, I'm already at 65K. All right? But if you just narrow down your universe, and I know the shiny objects are distracting, but I think there's a lot to be said. I don't know if you guys know, like a market maker, he only trades one product. A market specialist will trade maybe 2 and sometimes 3, okay? That's it. A market maker trades 1 and a market specialist trades, maybe 2, sometimes 3. Okay? These are professionals that do what you want to be. All right? So think about what they're doing and think about emulating what they do. They have a really small universe of what they trade. And for me, it just makes sense. I don't have to go look at, I got a lot of guys in the room that, bring up Tesla and they do really well with it. For me, I stick to what I know, and that's, the SPY and the QQQ. And I'm happy for them. And here's the thing, they trade it all the time. And that's how I know that's why they're good at it. Because they stick with just a handful of products that they know how to trade. All right? And with that, they've done, I know some guys that make, over 3 figures, all right, trading here in the room. Yeah, they make over, not 3 figures, but, all right, they make over 6 figures or 6 figures or more trading in the room, trading just a few products. All right? They don't go chase like, hey, this one's hot, this one's setting up, this one's that. Okay? They just trade a few products and they're able to pick the correct option, pick the correct strike, all right? Pick the correct time frame, and they know how long those 15-minute uptrends or those 30-minute uptrends will last, and they just trade them day after day. Same thing, over and over. So there's a lot to being said about having a small universe of products that you trade over and over and over. And there's days where they don't even trade. I mean, because their universe didn't set up that day, and they do really well with what they do, and I couldn't be happier for them, because they've learned that keeping it small is sometimes better than having a big I don't know, a big watch list, all right, to keep an eye on. All right, they keep an eye on maybe 10, maybe 5 or 10, and they just keep an eye on those, and they do really well trading those 5 or 10, looking for the 10-minute uptrend. It's the same thing that I show them. The consolidation over the prior consolidation. The green erases red. They'll do this over and over. And they got really good at it. All right? There's some guys in the room that are really good at picking up those stocks that I just mentioned, the Nvidia, the Tesla, the Amazon, and do really well with it. So think about that as a trader. For me, I'm happy with my little universe. I really am. Like the wedge going on here. We're into 11 o'clock. It looks like we're going to get another blast up, which is exciting to see us get on top of all of these wicks up here. And I got to say, it looks like we got an open gap overhead right up there. We're gonna get some resistance right around 689.46. So if we bust through this, that's our GEX, or our gamma, the dealer gamma exposure, okay, which we were talking about earlier. And then again, remember, it's plus or minus 50 cents. So you take the 690 minus the 50 cents, you get 689.50. And where do you see this valley between the peaks? Okay, right in the middle of gap fill, right there, right about 689.50. Okay, so I can see a wedge. You can see the wedge forming right here for a possible breakout up to 689.50. So that's looking good. That's looking good. Not to mention the trend day is looking good. Again, that's 10-minute uptrend over VWAP. Now it has to break some resistance. Obviously, it did here. It did here. And it's doing it again. All right, so it's on track. And if we close in a 10-minute uptrend by noon, there's a 70% chance this 10-minute uptrend stays intact till 2 o'clock, 2:30. All right, so, and if that happens, you know what it means. It means they're going to be grinding away at the overhead supply, all right, located at 690, all right, and the dealers, okay, if you see that, that means that they'll be spending a lot of time grinding away at overhead supply, and the dealers may have to push out to 691 and 692. All right, so we could be attacking the all-time highs today. It's possible. All right, but we'll see. I don't want to get ahead of myself, but I do. If we get a wedge breakout, I do foresee possibly attacking the 690 area and maybe even 691. All right, so we got a wedge building up. See how the 8 EMA, see how the mouth between the 8 and the VWAP keeps getting larger and larger every candle. So it's looking good. It's looking good to get to the upside. Yep, this like Trader X says, find one thing, and it's a great quote. Find one thing and get really good at that one thing, and stick to it. My one thing. You want to know what my one thing is? It's the 10-minute uptrend over VWAP. That's my one thing. That's all I talk about is 10-minute uptrend, 10-minute uptrend. Now I could pick the 3-minute uptrend, okay? But you can see that the 3-minute uptrend doesn't quite last as long as the 10-minute. See how the 10-minute stays open? See the daylight between the 3 and the 8? Okay? That's, to me, the 10-minute is the one that I like. Okay? It's capable of staying open longer. All right? Whereas the 3 or the 5, now see the 5 here, but see the 5 gets crowded. See how the 5 is crowded with tails and bodies in here. Okay, the 5, see the 5 crowded, but the 10's not crowded. 10's got daylight right there. And that's what I like. I like that daylight where I can see right through between the 3 and the 8. And there's not much obstructions in between there. And the 10 minutes tend to last longer. All right? Because the fives are a shorter time frame. But there's nothing against, when your 5-minute closes out, what if it restarts again? Well, yeah, you can trade it. Okay? 10-minute, beautiful. That's what I like because they tend to last longer. And we look at the 2-hour. You can see the 2-hour is in an uptrend right here. That's a beautiful thing. Daily is in an uptrend still. Okay, we haven't broken any lows, so we're still in an uptrend right there. Okay, weekly, obviously uptrend. Monthly, obviously uptrend right there. So it's looking good. Everything's still looking good. Things aren't falling apart, but there is one product that is falling apart. Okay, and that's this one right here. Okay, so see what this is looking like today. Okay, consolidation over prior consolidation. So we made, look at this, we made a higher low right here. Okay. They tried to make a higher high. That's not a significant higher high. All right, so they bounced off a VWAP. All right, so we'll see. They still need to make a higher high. If not, this might be it for the end of the day. We'll see. This might be the top of the day on SPY. But we need performance out of this or the Mag 7. Yeah, Mag 7's looking a little bit better than FNGU. Notice that with that higher low right there. A little bit of exhaustion going there. Probably going to consolidate over to the right. Okay, but remember when we looked at the market early this morning, we were looking at T2123, and we were talking about how price is still holding that bull flag up there. Okay, and look at that. Oh, they climbed on top of the 200 SMA. That's a really good sign. Okay, remember we were talking about how price moved up. Okay, and we have a bull flag right through here. All of this is a bull flag. All right, and you can see where price is moving up. Okay, so As long as this flag doesn't fall apart, I'm going to still stay bullish. And you can see we climbed back on top of the 200 SMA. That's a bullish move right there. Okay, and look, we filled the gap. See the bearish gap down that I was talking about early this morning. Okay, so there's the bearish gap down that was never filled by the bulls. All right, showing some weakness on the bulls' part. Okay, now we filled that gap, and not only that, we made a bullish gap up. All right, and the bears haven't filled that gap. So this is looking good right now. So far, it's looking good. Everything except FNGU. I don't like that. I don't like this. Up here. So, but I do see a pennant forming. All right, if they can hold the pennant and then break out to the upside, that would be nice. Got a bullish gap up. That's nice. Not filled by the bears yet. Still clearly a lot of work to be done. Need to see a pennant, that pennant form out, and then another move up. So we'll see what happens. Things are looking good for today for the indexes. And it very well may be that, those end of year contributions, 401ks, IRAs are coming in, and people have to buy or put that money to work. And some of them, might be buying some of this tech, okay, way up here at the highs or on the pullbacks. They may be buying the tech pullbacks. Because let's face it, if you want growth, it's all coming in technology. Usually if I see a 10-minute uptrend, that's when I decide. When I don't see a 10-minute uptrend and I'm kind of forward looking, then I go out to the 4 and 11 days till expiration. James? I'm not sure if you heard me. Yeah. When I see a 10-minute uptrend like that one we saw in the SPY, I don't know if you caught it early this morning. Okay, because I said, hey, when price gets over this, that's a buy for me. I said it. That's a buy for me. And you can see the 10-minute trend started right here. So that's when I want the zeros, okay? Now, if it started like way back here, maybe not. Maybe I want something that's going to last the test of time. So maybe I'll want some 4 days till expiration or some 11 days, okay? Because that 10-minute trend's been running for a while. But this one just started, and a typical 10-minute uptrend will last, I don't know, like close to 3 to 4 hours, all right? So this should take us right into 1 o'clock, all right? And we'll probably have a trend day, so it'll probably pinch a little bit around 1 or 1:30, and then at 2 o'clock we'll see if they want to give us a pullback or if they want to continue melting it up. Right now it's looking fantastic. So this one just started. That made me want to take the 0 days till expiration because the 10-minute trend just commenced. And those will typically run for 2.5, 3, 4 hours. Look at the pop. Looking for 689.46. Remember, okay, that's the valley between the two peaks right here. Right here. Valley between the two peaks. Right there. Okay. Look over to the left. You see that valley between the all-time high and the next lower high right there. Over here. Okay, right there. That's going to be my breakout target right up there. about 689.40. And it matches up with our GEX at 690 plus or minus 50 cents right here. And not only that, it matches up with, doesn't quite get us to Woody's R1 though, but that's close enough. That's a nice run. You got to remember, we closed down here at 683 and we're $5 up already. So that's a nice move. It's nice if you can capture all of it, but there's no guarantees you capture all of it. Nice consolidation. See how it holds up there, James? Right there. That's a show of strength. That's like, holding a plank for an hour right there. Or 45 minutes. That's not easy to do. Okay? So, and they're doing it right now. So that's a nice show of strength. It's looking good. I think we get to 689.46. I think that might be high of day. All right. 689.40. We'll see what happens. So let's talk about rubber band candles, okay? All right. This is a 5-minute chart right here. 5-minute. See this 5-minute chart? Here's a spike candle, okay? Big spike candle right there. See how it intersects VWAP. VWAP is pretty much almost always, not all the time, almost always my point of interest. Okay, so VWAP right here. So you can see this is big spike candle that intersects VWAP right there. Okay, and then you got a free floating candle that surpasses the spike candle. That's this one right here. Okay, that's the red candle. Okay, if a candle would have closed down here, closed underneath it, okay, it would have broken the rubber band candle. This is the spike candle. This is the rubber band candle. Okay? Spike. Free floating rubber band candle. Okay? It was this candle's duty right here to close underneath it in order to break the rubber band candle. Now you notice it failed, so the energy inside of the price action brought price back to VWAP. See how it went down and then it snapped back. That's why I call it the rubber band candle. You ever take rubber band, wrap it, put it around your wrist, you pull it out and it snaps back on your wrist, right? Same concept, okay? The energy pulls the rubber band right back to your wrist. Okay? Same concept. This is the point of interest. aka your wrist. All right, so we're on the 5-minute charts. That makes this the 5-minute bearish rubber band candle. Okay, it's the bearish one because it's underneath the VWAP. If it's above the VWAP, then it's the bullish one, but it's underneath. It's the free-floating one that surpasses the big spike candle. Okay, and was this candle's duty was to break that rubber band candle, because if it fails, it's not 100%, okay, but there's a good chance price retraces back to VWAP. Okay, now you notice on this up here, we got a spike candle, we got a free floating candle, and then we broke the rubber band candle. And what happens? Price continues that 10-minute uptrend. See that? 10-minute, that's a 5-minute. But you can see if I put it on the 10-minute, you'll see a nice 10-minute uptrend. Okay? So here we have spike candle. It intersects VWAP or spike candle. Free floating candle, not attached to VWAP, surpassing, okay, the big spike candle. Notice no candle on the 10-minute chart was able to close beneath the rubber band candle, thereby breaking it. Okay? The energy in the rubber band snaps price back to VWAP. All right? And then they break out right over the top of those candle bodies right there. And you get a beautiful 10-minute uptrend. Notice this one, you got the spike candle. Okay, this is the rubber band candle. We close above it. 10-minute uptrend. Beautiful 10-minute uptrend right there. This would be the bullish spike candle. This would be the bullish free floating. Notice it is not attached to the VWAP. So this is the rubber band candle. Okay, it's not attached to VWAP. It surpasses the big spike candle. Okay, so, and then we close over it, all right, thereby breaking the bullish rubber band 10-minute rubber band candle, and we get a bullish 10-minute uptrend that lasts for, well, 1, 2, going on almost 3 hours now, all right? So there we go. You guys understand the rubber band candle and why we look at it? We're looking at a break of that rubber band candle. Now, I have a kind of a rule that if I see price give me more than six consolidating up here, and it doesn't work all the time, but it works, pretty often, almost like 95% of the time. If I see price put in more than 6 10-minute candles holding those highs, all right, I form a bias that they are bullish, okay, and they're committed to going higher. So we got 1, 2, 3, 4, 5, 6, 7. This is 8 right here, okay? So it is apparent to me there's a 95% chance that, okay, they are committed to going higher. Because notice they're not leaving the area. Okay, you've seen it before where price goes up and then gives it up, right? I mean, we've all seen it. Here's a perfect case, okay, of going up and giving it up. Okay? Okay, but notice that's not happening here. Okay? Much different than what happened here, than what happened here, than what happened here. Okay? You see what I'm talking about? It's much different than what happened there and there. Okay? Notice they got up here and they're hanging around. They're grinding away at the overhead supply. Okay? So, meaning, why waste your time grinding away at overhead supply unless you plan on going forward? Right? I mean, it makes no sense to just grind away at overhead supply and then leave. Unless, of course, some news came out, somebody tweeted something like we're going to double down tariffs on China and Japan or something stupid, all right? All right? Something like that, then I can see why they're leaving. Okay, but when it's like this, all right, that's bullish, all right, 95% of the time, looking to go higher. Okay, they're grinding out overhead supply so that they can start moving higher. They want to go higher. They're committed to going higher. Otherwise, why would they stay there? All right? It doesn't make sense. They would leave. So I think there's a really good chance we get up to 689.40. All right? 689.40's on my radar. Now, we may get higher than 689.40, but that's all I see at the moment. Thank you, Sharon, for visiting with us. I hope you learned something. I hope I helped you even in the smallest amount. And Happy New Year. So I'm just going to go out and say it here. Everybody visiting, I know Sharon's leaving. All I got to say, for the last 12 months, every open house, we've done at least 1%. Sometimes 2, sometimes 10. But if I have an open house again, I would put it on my calendar, all this year. Don't miss John's open house. All right? Because it's just a chance. There's 1%, let's say 1% every month that I have an open house. There's 12% right there. And if you learn something that makes you another 1%, okay, each month, there's 24%. Okay, now you're talking like close to S&P performance. 24% on an annual basis. Okay, just number one, just going to John's open house. Number two, picking up a new skill that you master, okay, and you make another percent each month just mastering that skill. Okay, so there's 2% each month right there. That gives you 24% at the end of the year. Just saying, like, I wouldn't want to miss John's open house. Even better is, just going to go out and say it, is to get a subscription or a trial. Then you don't miss anything. Okay? Just think about it. Something to think about. Oh yeah, 10-day ATR is 437 right here. We've already moved well over 437 so far for the day. Some days you can get 1.5. Some days you get 2. Some days you just get 1. Today's one of those bullish days, Paul, that's the beginning of the year or the beginning of the okay, how do I say it? Okay, at the end of the quarter, you have everybody in the union's got a 401k. You know what I'm talking about? Everyone's got a 401k or an IRA in the union, or let's say you're in the teachers union or you're in the machinist union or something like that, okay? So they're called end of the quarter contributions. So all those contributions come in to the fund manager, all right? And he has to find a good place to put them, okay? So this is that end of the quarter time right now. It's the beginning of the year, all right, where they're putting those contributions to work. And there's no better place to put those contributions than probably technology, because that's got pretty much the most growth, all right? Because you want to be safe. I mean, you want to have performance, right? I mean, you're trading other people's money. You definitely want to have some kind of performance. So why wouldn't you pick something that's going to perform well over the next year? Of course, there's an AI. Not going to call it. I could call it a bubble, but there's an AI boom. I'm going to call it a boom. All right. So there's an AI boom. All right. Obviously, they need a lot of energy for that AI boom. They need a lot of specialized graphics chips to perform the duties of such. So they're going to, so it all revolves around tech. So they're probably going to be buying some tech. And of course, you can see some evidence of that today. Yeah, this is what I was kind of expecting. This is beautiful. This is beautiful. So you can see some evidence of that today by looking at the FNGU is bouncing. Okay, and then you got QQQ is probably doing well. We should go over there and visit it right after this finishes out here. Okay, so there's another one, 23. I want to sell. I'm just concentrating on this because I want to sell into strength. Remember I said 589.40. And you can see we're 30 cents away right now. So I want to capture this because I'm probably... Oh, yeah, beautiful, 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 beautiful. And I love it. Keep going, keep going, keep going. Come on, 20 more cents. 20 more cents. You can do it. Okay, so there's 2%. Okay, remember my goal was 300. I made twice, so that's 2%. And it's 12 o'clock. Okay, this should be quitting time for a lot of my BYOB members that know that they will probably give back all of that 2% and more if they continue to trade in the afternoon. So think about it hard, traders, before you decide to stick around or go to paper trading so you don't lose what you work so hard to gain. Okay, so the end of the year contributions come in and they want to buy tech because tech has probably got the most growth. All right, so if it's going to succeed this year, they're going to want some tech, and we should go look at QQQ, see how it's doing, and I'll bet it's doing fantastic. And QQQ, it's got it's a nice uptrend there. Let's take a look at the 10-minute chart. So QQQ went from, well, let's just look at this, 613 up to 620. So that's a $7 move. Okay. SPY went from, okay, 683 up to 689. So that's a $6 move. So QQQ doing fantastic because QQQ, remember, is much lower, so it's a higher percentage, all right, than SPY, because SPY is trading at 680, 689, 685, whereas QQQ is trading around 620. All right, so QQQ doing well today, not as well as I expected, but still doing well. And of course, that could be those money managers buying some of that technology for future growth this year. A little bit of what Doug likes to call window dressing. So there we go, 2%. So if I got 2%, okay, so it's not going to take, if I get 2% a day, guess what? It's not going to take 70 days. 35, right? Cut it in half. If you double your performance, you're going to cut the time in half, 35. Maybe by the end of the day, I have 4%. Who knows? You know, we'll see. So it's my opinion that that's probably going to be high of day until the end of the day. And I think there may be a 10-minute rally at the end of the day to take us in to close at the high of the day. All right? Because we just hit the valley between two peaks right there. All right? So now we're going to need a pullback or some type of consolidation over prior consolidation. So we'll see if we can consolidate above it. That would be bullish. A pullback and then regain the area. That would be bullish. That's it for me. All right, right there, it's 2% until I see my setup. That's a target. It's almost always a target for me. Everybody knows that in the BYOB Trading Room. Anytime I see a valley between two peaks or a peak between two valleys, they already know that's pretty much always a target for me. And that was the target right there. All right? Unless I see some type of bullish behavior where they're holding this area for, 2 hours. All right? If they can do that, well, I might consider getting back in. But other than that, I'm going to let it rest and do what it needs to do. All right, because I think that's about it for me for the day. Unless 2 hours from now they're still doing candles over prior consolidation. Love it, CP. Way to go. So what a beautiful way to start off the beginning of the year, making 2% right out of the gate. Right out of the gate. Jim, let me just share this with everybody in the free room. Jim S., regular member here at the BYOB Trading Room. He got 2 daily goals and another daily goal on IWM. So you got 2 on SPY, 1 on IWM. Love it, Jim. Love it. Way to go. I love it. Well done. Way to go. And I love to hear the good news. So if any of you guys in the free room, other than Sharon, I know Sharon's already shared it. If you're in the free room and you made some money, by all means, speak up. Paul was paper trading, was in at 20, out at 28. Way to go, Paul. Love it. Awesome. If anybody in the free room made some money today, following me or listening to me or anything, don't be afraid to speak up, share it. I would be happy to be your cheerleader for the day. All right. Yeah, it's just like Ed wrote right in there. Okay. It's the constant approach, no more than 10%. Right here. 10%. I don't know if you looked. I don't know if you followed the cost basis. I don't even think I broke 600. All right? I don't even think I broke 600 on my cost basis with those contracts. All right? So it was clearly well below 10%. Well below 10%. So you can see, I did not have much at risk at all. Okay? Being 600, that would be like, what, 2, that's like 2%, right? If I had 600 at risk, that's 2%. And we try to do this every single day. Now, we don't get it every day, but I'm going to say, I think 4 days out of 5, I think we pretty much nailed the 1% or better. It's based on the total premiums. The total premium, Pete. Now, it'd be even less if I used the stop loss. So SPY did what I kind of wanted it to do, was hit the valley between the two peaks, okay, for the day. Okay, that was, if it does anything more, that's fantastic. It really exceeded what I expected. So it's done very well for today. Now I want to see, after hitting the valley between the two peaks, how it acts. Is it going to consolidate up here? Is it going to pull back to VWAP and then bounce back up and then regain? And I have to see how it acts through here. Now, if they decide to hold, okay, for, I don't know, 2 hours up here and just grind away more overhead supply, okay, that will be inspiring for me to pick off the bottom of my option candles and try to trade this thing up over to 690.70 or 690.50, okay, right up to Woody's R1, all right? But I need to see it hold. Again, remember I said I like to see it hold for more than six candles, okay? So now we've moved up. So now I got to wait 6 candles. Now I think it's going to take a little bit longer than 6 candles because that would be normal. All right, but I mean, I've watched SPY and how it trades. All right, and that's how I come up with these numbers. How do you know 6 candles? Okay, because I've traded it so often that I'm super familiar with it. All right, and that's why I said when I see 6 candles, it shows me that they're committed to going higher, and sure enough, they did do what I expected right there. So now I need to see them do it again. All right. All right. Once I see that, I will be inspired to maybe take some more calls. Now I can always go through and, get a few calls and be a part of the breakout in case they want to continue to melt up by taking some with more time left. But using a 0 DTE at this point is probably not the smartest choice here, because I need to wait to see what it does for 2 hours. So 2 hours of decay on a 0 DTE will probably tank that option all the way down to probably close to 4 cents a share. Okay, so it just get me in trouble, really. Look at how far it dropped so far. So you can see right here, I'll put the crosshairs up. Okay, so it dropped from 34 down to 18, probably even less than that, 16. Okay, so you can see it lost half of its value in just one 10-minute candle right there. Okay, and it hasn't done anything. It's just gone over to the right. Okay, so if they stay doing this for 2 hours going to the right, this is just going to melt down even lower and lower and lower. Now, there'll be a point where it stops, which will probably be close to a nickel a share, as long as it maintains a low of 688.50. All right, it'll probably maintain a nickel a share. So I'm really not interested in any of this, any of that, any of that, any of that. I'll leave these two on, okay? Other than that, I'd rather go out to a 4 days till expiration, because we're probably going to consolidate for another 2 hours up here. And why go through all of that pain with the decay of a 0 DTE? I'm much better off taking an 11 or a 4 DTE option that will have minimal decay, all right? Because this thing expires at Well, it expires at 4:15. All right. If we're not up over 690 by 4:15, this thing's worth zilch. All right. So don't be hanging on to this. All right, unless you think it's going to go higher. In the next, it doesn't make sense to hang on to this unless you think it's going to go higher in the next hour and a half or hour. Right, and it might, but after seeing what it hit, I'm not willing to take that chance. I'd much rather go out with a 4 DTE and give myself some more time. And if it wants to break out, I'm still part of the program. No, not necessarily. I'm willing to accumulate on these candles right here and not sell any, but if it all depends where my cost basis is. See how it's coming down, Pete? It's just decaying. If there's opportunity, I will sell on the same candle. Okay? So let's say it costs me, think about this, Pete, right? If it costs me 50 cents to get in, all right, which is a normal fee for a contract, all right, 50 cents to get in, and it costs me 50 cents to get out, all right, so there's $1, all right, so there's 100 shares, so 1 penny would make up $1, okay, because there's 100 shares. So if I can get it to move 2 pennies, all right, I will have paid for my commission, and I will, in fact, extract a little bit of profit. Not much, but I can extract a little bit of profit. But keep in mind, I don't want to spend all of it getting a dollar profit when I know that there's a high probability that price is going to come all the way up to 33, and I'm selling them here for 15 or 17 cents a share, and I'm only capturing, let's say, $2 of profit. See right there? See, I got 2. One of those dollars goes to pay for the commission, right? 50 cents in, 50 cents out. Okay, and the other dollar profit is for me. Okay, so if I expend all those shares there, I kind of cap how much I can make, but you got to be in it to win it. It's like playing the lottery. So if I can continually sell, 2 contracts at 18 and then reload 2 more at 12, see how I buy some at 12 and unload some at 18. All right, I'm constantly bringing my cost basis down, and I'm making a little bit of profit, not much, at the same time, while I'm waiting for the next pop. See the pop? Okay. I could see this pop building up, so I bought 20 right there. I could see the pop coming in the higher lows right there. So just before that pop happened, see the decay? 34 down to 14 cents, okay? There's 20 cents lost already. Okay, see how it doesn't pay to hold on? See? If it doesn't have any momentum, you just experience state of decay. If you have momentum, and the momentum has to be good, okay? Because there's times the momentum can just be just enough to cancel the theta decay, and then that's it. All right? Sometimes that's all there is. Sometimes the momentum isn't even enough to pay for the theta decay. All right? And this is one of those times where I'm thinking, I've seen this before. All right? I've been to this rodeo, and I know the clown doesn't make it, all right, at the end of the rodeo, because the theta decay just kind of grinds away at anything left, any energy left in that clown, the rodeo clown. Okay, so it's not worth it. So for me, I'd rather just sit out and just wait. All right, wait and let them show me what's going to happen in the future. At least show me they can hold it. So yes, the answer to your question, I'm trying to sell on the same candle, but remember, I put up a net of sell orders. Price has to run in to my net. All right, if I can't get it to run into the net, then then I'm kind of just stuck with it. All right, and there'll be times where, like these candles here, I'm holding a position. See, this candle didn't sell any. This candle didn't sell any. This candle didn't sell any. I'm holding a position waiting for the blast off to happen. Every day. Pretty much every day. Paul, the answer to your question, pretty much every day. If there's a 10-minute uptrend, yes. Anytime there's a 10-minute uptrend or a 10-minute downtrend, anything I can make money on. See this? See the mouth of the 8 EMA and the VWAP? See how it gets wider and wider? All of that. Anytime you see that, that's opportunity. Okay, that's where I want to trade zeros and ones. Day till expiration. Okay, so anytime I see that, that's what I want to trade zeros and ones on. Okay, because that's all opportunity right there. You ever see the mouth get wider and wider and wider? That's all opportunity. See, but we just hit the target, so they just got stunned. It's like the whack-a-mole hit them on the head, so they're probably going to go sideways, for the next hour, just trying to melt up. That's probably what they're going to do. Continue to try to melt up to 689, 689.40, 689.50. All right, so here's the 3 candle pullback. Now we want to see them kind of melt it back up to 689.50. So you guys understand, keeping your universe small and tight. Get familiar with the ones you want to trade. Whether it could be Tesla. I mean, you don't even have to trade Tesla options. You can trade, I think it's, what's TSLL? See, there's Tesla 2X. Okay, now look how cheap that is. $19 a share. It's a big difference than trading 450. Okay, you could do the options if you wanted to. but you got the TSLL. You can trade those. Okay. You can trade those if you're not comfortable with options. There's a nice one to have on your favorites list. Okay, here's the NVDD. There's the bear. NVIDIA right there. So NVIDIA is dropping today, obviously, because look at the bear is moving up. Okay, so that's not going to help out the market, right? It's not helping. Okay, so there's NVIDIA. And a lot of these have, you can see, they've got these, see here's the 1.5 short, the 2x inverse, here's the 2x capped accelerated, all right? If you're not comfortable with options, there's one to be familiar with is these right through here. See how NVIDIA's got a lot of products you can trade. Same with SPL. No, SP. I know there's some 2x SP SPY and 2x inverse SPY too. See, like I said, I'm not good at picking tops and bottoms, but I'm pretty good at targets. All right, so you see me holding anything? No. So we're pretty good in the BYOB trading room, making some profits. The 10-minute uptrend commencing right here, Robert. See how it began right there? Right there. And they usually go for like 3 hours or 4 hours, depending upon if it's trend day. But you can see how it just began right there. Okay, so it's going to have some quick momo, some movement right there. See, talk about getting out at the absolute top. Right there. Only because that was a target. Okay? I'm not really that great at picking tops and bottoms, but I think that will be the high of the day for a while, and I'll have to watch price action and see what it wants to do. All right? If it can hold these highs, it has a chance of going higher. If it pulls back and recovers, it has a chance of going higher. Okay, it could just melt off for the rest of the day. Getting the pinch. Remember I talked about the pinch? We're getting the pinch. There's the 1 o'clock pinch. See, picture your index finger and your thumb. The white line is your thumb, and the yellow line is your index finger. And see how they're getting closer and closer. Now they're pinched up tight. This is the pinch. So we talked about keeping the universe small and tight. We talked about not picking tops and bottoms, but jumping in on trend. Okay, we had a 10-minute trend. All right. Okay, picture a river of money just flowing, down your street. All you got to do is fall in right there. River of money just flowing. All you got to do is just fall in right down your street, right there. It all depends, Robert, like on your time frame. For me, you're going to get better. I'm going to get better performance on an in the money option. Now I'm going to get the back and forth, and you'll also get the back and forth. Okay, like let's go look. See this big long wick? Let's go take a look at that option, but it's in the money, okay? So let's take the 684 calls, all right? 0 DTE, all right? So let's go look at the 684s. And we'll look at those 10-minute candles, okay? So we'll take 684, okay, which are currently trading for $4.45 a share. Okay, remember you pay up. Okay, now you've got this one started at 318, and let's take this one right here. Okay, see with the big wick. Okay, started at 318 and it went up to 418. So that moved a buck in 10 minutes. All right. Probably moved $2, went up and back. But you can see it moved up a buck and then back. Again, with your 10-minute uptrend, you want to pick off the bottoms of these candles as long as the 10-minute uptrend continues to go. Even on the in the money options, okay? You want to continue to pick off the bottoms, okay, until you hit your target, or as long as that 10-minute uptrend is intact. Okay, so you don't get the theta decay. All occurs when the momentum subsides. Notice when the momentum subsides, you get, look at the decay in the price. It's up to 550. Now it's down to 4. Let's just call it 450 right there. Okay, it's still in the money. All right, it's still in the money. But look at the movement you got. I was only getting on this in the money. All right, you got to move from 615 to 415. Okay, now you take the one I was in. Okay, my movement was 11 cents to 25 cents. Okay, it was 100%. You know, you take, let's say I got 12 cents. Okay, and went up to 25 cents. So I got 100% if I dumped in all right there. But I want to see, all right, at the beginning of the day, I want to see some action of what to do, and I haven't got any contracts yet, so I got to accumulate them. But you can see up there, you know, you get 100% if your average cost basis is 12%, and you're selling all of them for 25%. But you know the chances of that happening are slim, all right, unless of course, you know, you're good at holding and you know that it's going to go there, all right? But there's 100% gain right there. Whereas on the other one that was in the money, remember these 484s, okay, you only got $1 movement right there. So it was a lower percentage of movement, but it was more cha-ching as far as change as far as it goes. See, I wanted to see it hold. And it didn't hold, did it? And you pay up for the, you know, for the in the money. The cost of getting in was $290 a share. Okay. But you're going to get better performance than I got. So each contract costs $290. But you had the potential to sell that, whereas I'm selling mine at 24 cents. Okay, you had the potential to sell those in the money up there at 90 cents a share. So let's take that. Let's talk about reality. Okay, let's just say it moved $1. Let's say you got 85 cents of that. So that's 100 shares times 0.85. It's $85. For each contract you got 85 cents on. I mean, you do that 3-4 times in the first 2 candles right there. I mean, you've hit your daily goal. Well, my daily goal was 300. You can see hitting your goal pretty fast, especially if you've got 5 contracts right there. Let's say you had 5 contracts times 5. That's 425. So on the very first candle right there, you had the potential to make your daily goal if you had 5 contracts in the money, 0 DTEs, and your average cost basis was 12. All right, and you were able to capture, no, your cost basis was, let's say, about 285. You were able to capture 85 cents per share up there. That's 485. So the performance is significantly higher in that you could have made your my daily goal right there in lickety split, but for me to have 5 of those contracts, let's just say I bought them at, let's just not say I'm real good at it, okay? Let's just say I got them for 290, all right? So how much is that going to cost me? 2.9 times 100 times 5 contracts, 1450. That's gonna tie up half of my capital that I have for risk. All right, but in 10 minutes, I made my whole daily goal and then some. If I'd have done in the money options, you get much better performance. Always get much better performance. It just takes more capital. It just takes more capital. That's the problem. If you have a limited amount, so I'm starting off my account. I've only got $30,000, and I'm only willing to risk 10%. So I only have $3K. So for me to get 5 contracts, that means I only I only have 5 more contracts I can get. If I want to average my cost down, let's say they move price down a little bit. I mean, I want to bring my cost basis into where they're trading at. Sometimes it takes me 20 or 30 contracts just to move price to where they're trading it at in order to move my cost basis into a range where I can make money in that area. So I only have five contracts left that I can purchase because I've used 5 up already, just trying to get in for the first candle. So, any of you guys on the fence or girls on the fence here, I just want you to know that I do free coaching. If you're a member, all right. If you're a member, I'm committed to making you a winner. All right. Can you guys can hear me, right? I'm committed to making you. Rod made 5K today, and he's out of here. Way to go, Rod. Yeah, I'm committed to making you guys winners. All you visitors out there, all right. I do free coaching. All right. I'm here to help you learn, and I don't think it's ever been done before. Before we started it here at BYOB and Hit and Run, that coaching comes along, is included with your subscription. You know what I'm saying? I'm not sure about Hit and Run, but I know Rick's sending trials out with some coaching that's included in it, along with some phone calls. So but at BYOB, I'm here to help you succeed. All right, and I look, if you're losing money, you're not going to want to stay with me. You're not going to like BYOB. You're not going to like day trading. You're gonna find it very difficult, and you're going to lose money, and you're not going to know when to stop, and you're going to probably try to force something to happen that's not going to happen, and you're going to get hurt. All right. So, I mean, for that reason, all right, I tell this to a lot of traders. Okay. If you're not making money, all right, then you need to go to a paper account, because God knows we work way too hard to save up our money. All right. Some of us worked 50 years, some of us 60 years, okay? Every day, getting up, punching the clock, putting the uniform on or the monkey suit, whatever it takes, wherever you went, or putting on, lipstick and whatever it takes, to show up for work and be presentable, sell some real estate, whatever it takes, okay? You work way too hard. Saving for our 401ks. All right. So let's not lose them because we don't know what we're doing. Okay. So if you're not making money, that account is not growing, then please stop, get a paper account, trade the paper account, learn how to grow the paper account. All right. And then slowly introduce small bits of real money. Okay. It takes time, okay? This is not something that's going to happen in a week. If you think it's going to happen in a week, I hope it does for you. But the reality is, it takes time. It takes time to understand. It takes time to get the mental attitude right. It takes time to control your emotions. You're trading against yourself, all right? You're going to find that you're not trading against me. You're not trading against the market maker. You're trading against yourself. And it's all on how well you contain yourself, your emotions, your rules, and follow your own rules. That's what it's all going to depend on, all right? And having a trading plan to begin that with is going to help you out immensely, all right? And then to have a coach that's willing to help you with your trading plan or with your trading, all right, that's going to help you immensely, all right? It's not something you can get in 30 days. All right. And let me just say this. If there's anybody in the BYOB room that learned how to day trade in 30 days or less, raise your hand or just say, I got it. Okay. But I'll bet nobody says it. all right, and be a master at making profits during doing day trading, it takes time, all right, and yeah, nobody's saying anything. Okay, they all know that it takes time for this to work. All right, so because it takes time, all right, I offer the free coaching. All right, I don't think you're going to find a better deal out there to learn how to day trade. All right, and get some free coaching at the same time. All right, so if you're on the fence, there's something right there. All right, that should help you get off the fence and find a home with BYOB. All right, is that free coaching? I do lots of tutorials. I come in, I set you up every single day for everybody in here in the room. I'm right here. Jim asked, great game plan. Thanks, Jim. Jim did well. Look at Rod. Rod did well. I'm telling you, there's some traders in here, okay, that are pulling 6 figures or more, okay, every year or every month. I know some of you do it every month, okay. You can make some good money, all right, but you got to know what you're doing, all right. So I share this stuff every single morning, okay. I try to start everybody off on the right foot. Now, I trade futures at night, okay, so I know there's some of us that trade futures, so I give you little game plan. Green erases red, red erases green, okay, for the futures traders. That's the ES, all right. Provide that every day, unless I'm on vacation or it's a holiday, okay. I give you my trade account value, max risk, daily goal. Provide that every day, okay. Give you a summary of what happened the day before, okay. Give you some bulls, give you some bears, in case you can't make up a list or find a universe. I've got one for you. I've got you covered. Every which way you want to turn. Okay, you want to swing something? Here's something to swing, right here. All these, all in downtrends. All these, all in uptrends. Okay, so I got you covered. Okay, then I got a SPY game plan right here. Okay, so price above. Pivot, red erases green, green erases red. Give you a SPY game plan, QQQ game plan. Okay, this happens every day unless it's a holiday or I'm off on vacation. Let me mention somebody else. Okay, Tex right here. Tex post all kinds of charts. All right, showing you and informing you where the gamma exposure is. Okay. Remember I brought that up earlier? Well, he has his own program, all right? So this is the gamma exposure showing you it's a big bar at 690 and seem to be building one at 688 now too, all right? So we'll see what happens, all right? But there's gamma exposure right there at 690, all right? So Tex will share that often. He'll also share Woody's pivots. Then here's John Jordan right here. Okay, comes up with he trades QQQ. He also comes up with a QQQ game plan as well. Buy above 619.14, pivot bullish above, SPY 615.33, sell below. All right, so you can see you got two different game plans to trade. All right. And both will probably make you money right there. All right, SPY game plan. You got free coaching, okay? I'm here for you. I'm here. I'm committed to making you a winner. All right, you got some swing trades if you want to swing trade. But I'm here. I'm here to help you to succeed. All right? I do this every day. People watch me. I fill this report out at the end of the night. All right, and I fill it in. Okay? You can be a winner too. Okay? You can be a winner too. All right, this is the place. All right, this is the place to learn how to day trade. And I hope you take a trial for $14 for 14 days. You know, it's a great way to see what it's like in here in the room. Okay, great way. Get your feet wet. And you know what? Get yourself a paper account and learn it on paper first, and then practice slowly introducing real bits of money. Again, practice on paper first, make that account grow, and then introduce real bits of money after. All right, if you guys got some questions, I'm here. I'm all ears, okay? Love to help anybody out. Absolutely, Pete. Why wouldn't this be? I make it incredibly easy showing you the green erases red entry right here. Showing you the 10-minute uptrend. Showing you the consolidation over consolidation. Therefore, I'm going to have a bullish bias. All right? So I'm going to look for a 10-minute uptrend. All right? Yes, this is doable. It is doable if you're willing to follow your rules, okay? Now, notice is not moving up and the momentum is gone, and you look at how far this dropped from 34 cents down to 7 cents. That's a big drop. All right? That's a huge drop right there. But you got to have rules that say I'm out when 5 minute, when the 3 crosses the 8. Okay? That's a good rule to have. I'm going to go to the 5-minute chart. When the 3 crosses the 8, I'm going to be out. Okay? Now, if you follow that rule, all right, I'm in on the breakout. And I'm going to stay with it till the 3 crosses the 8. Why couldn't you make money with that? Right? Recognizing chop. All right? When price goes back and forth across VWAP all day long. Okay? That's chop. Stay out of the chop. All right? Make your goal in the morning and then go work around your house. All right? Go educate yourself. Go do something else. Take a break and come back to the market. You're welcome to stay around. All right? But I just don't want to see you give it back to the market. And I've seen that a lot of times. And there's a guy in here. I don't know if he's still in here. He's in here earlier last week. But we eliminated giving it back to the market just by eliminating not trading after 12 o'clock. He kept giving it back to the market. And we just said, well, we're not going to trade past 12, and that's it. All right? That's it. We're just going to end it. That right there. Because every time I try, he said, every time I try, all right? And it's not just him. There's several of them in there in the room that try to trade when the momentum is gone. Okay? The zero DTEs and the options work as long as the momentum continues. But the momentum never, I'm not going to say never, it rarely stays intact all the time. The uptrend will stay intact, okay? But sometimes the momentum diminishes enough that theta decay overcomes any of the profits, all right? And it gets you into a hole. Now you got to find yourself doubling down in order to get out, okay? So have some rules. You can make some money if you have a set of rules and you're willing to follow your rules. There's no reason you can't make money. There you go, Pete. You know, congrats, B. You know, there you go. There's somebody. Robert's been in here for a while. Robert trades all the time. You know, if you might not be a SPY trader, you might want to trade something else. At least you're going to learn how to trade it. I got a lot of rock stars in this room, Pete. You're going to be the next. Yeah, that's why I'm here. I'm here to coach you, to help you get to that point. You can be a rock star. It all starts with you believing you can do it. And not giving up till you get it. And you're going to get it. If that's what you want, you're going to get it. You know, everybody out there, I mean, I hope to see you all next open house. You know, I said this for the last 4 open houses. I said you should come to every BYOB open house. I mean, because we make 2% almost every one. We at least make 1%. I know that. I mean, there's 2% right there. And I know I made it look easy. I know. It the way I did it, it looked so easy. But let me just say, the market did cooperate. Okay? There was a 10-minute uptrend. All right? There'll be days when you don't have a 10-minute uptrend. You'll get chopped, okay? But sometimes you get chopped until 2:30 and then you get a breakout. So I'm here for you. I hope you take a trial. I think it'd be like the best $14 anybody ever spent. Just seeing a day trader. I mean, where else do you go where somebody? I mean, I share this with you, right here. And then I don't know if you guys know it, but here in the BYOB Trading Room, you hit the hamburger up here, right here in the archives. I have recordings. Okay, not only do you see this, you know, me trading, all right, each trade, okay, but it's all recorded. On top of that, it's every day except for today. Today's not recorded because my prologue or the morning summary went way too long. It's actually still taping. Okay, so every day I pretty much tape. We had vacation after the 30th. Okay, so you can see I tape every single day, beginning to end, right here. Oh, looks like some of them got deleted. Oh wait, it says load more. Some more. Load more. Okay, so you can see every day. You can see the whole day of me trading. It's all right there. You know, nothing. I mean, I'm an open book. I'm here to show you that it works. All you got to do is look here, look there. Yeah, it works. I'm taking the same bid ask you got. All right, I'm doing the same strategy I always do. 10-minute uptrend over VWAP. All right. It can work. All right, I'm going to take like probably 45-minute break, or at least a 30-minute break so I can get some refreshments. I'll be here, but I just got to get something. But please ask questions if you're on the fence. I'm here to help you. I'm here to make you a success. Don't know what else to say other than I hope to see you all become members. Thanks, CP. So here's CP. CP sharing it. Yep, did it. Learn from John, take profit, and move on. There you go. CP, I'm at my quota for the day. Have made a couple mistakes, but in the money. Way to go. See, I mean, look at Rod. We got winners all the time, okay, in this room. Why not you?